Good morning. It's June 8th. We're going to be streaming all day stocks, options, futures trading. Yeah, technical analysis, watching the SPY, watching GME, barbecue, whatever runs. We will watch it. Sub up, like up, comment down. Happy money sticks around. Here, start of the stream. You were seeing my Twitter. It's at Happy Money YT. Follow us on there. And you can jump on our Twitter Spaces. I also put a link for Discord that's pinned in chat. If you're not on there, jump on there. I will be in the YouTube stream, voice chat on Discord if you want it. Welcome to, and yeah, ready for the day. Yesterday was pretty exciting. We had some data this morning. I think initial jobless claims. The initial jobless claims at 8:30. 236,000. Previous was 232. So slightly higher. I don't know what expectations were. Then we're also getting wholesale inventories at 10. Carvana ripped up. They had pretty good earnings. So yeah. Trend continues with Carvana. GME is still down from yesterday. Yesterday was so weird on GME. Just during the day, even the pre-market. I don't know if like someone knew or what was going on, but all the volume, pre-market action, then just the intraday price action, like how much all, like just really strange. So I don't know, but yeah. Then of course it dumped after hours and come down a little more. So I'm curious to see what those 19 puts would have ended up coming out to. IEP is up 1%, plays up 3 pre-market. The BAOS, that's one we watched. That one's up 80-90% pre-market. Ana's at 20. BAOS is up to 18. Not sure what the reason for this is. No news. It's a Chinese company. They probably tweeted or something. Barbecue. What are we seeing? Anything for pre-market? I've grown in my confidence for the barbecue play with what just happened with GameStop. So, yeah, I might be scrounging up some more shares. Let go. Morning, Kitty Daddy. Morning, Mo Lava. Morning, Cameron. And ShopRag, it's been a while. Been a while. Good morning, Buzzin. Happy money morning to you too. Morning, David. Man, tequila. Tequila. Tacos. Taco Thursday. That was crazy after. I'm glad I was able to move my appointment because that all happened so fast. I was like about to set up the new stream and just take off, and then the stock was, I mean, it was moving. I'm like, why is the stock moving? I don't see any of the releases. And then yeah, that was crazy. GME is a failure and Ryan Cohen is complete incompetent. I mean, I don't think GME is a failure. And yeah, I don't agree with that sentiment. I mean, he's definitely done stuff that's pissed me off, but it's hard to know when you don't have all the information. So, but yeah, happy day, happy money. Morning a werewolf. Yeah, a little increased sentiment. I guess, yeah, just increased my my speculation on Ryan Cohen being involved still. So, there's kind of three things for me that that I hold. Like, you can go on and say anything about tweets or whatever, and you know, get confirmation bias wherever you want. But the three main things I've seen with Ryan Cohen were, one, he's still on the interested party list with the filing. So that is, you know, that's a pretty big deal that he is still potential for this company. Second thing was the Teddy trademarks, that he's actually looking to expand Teddy and is planning to sell basically the same products that are in Bed Bath & Beyond and Bye Bye Baby. And then the third thing was him firing Matt Furlong and then tweeting not for long. So they're all still speculation, but as they start to pile up, it's just, you know, a growing conviction that he actually is involved. So, and not much else has me thinking that he is involved. Pretty much just those three things. Yeah, then not for long. No, I mean, yeah, I like it. People are upset with that? Those people that aren't happy, they must be new. They must be new to being a GME investor. That's totally par for the course. And if they're not happy about the financials, then they didn't understand how they were positive EPS last quarter, or rather Q4, because it wouldn't make any sense that would continue on. Not at least at that pace, unless they had a ton of revenue that come out of nowhere that we didn't know about. Because they can only sell out so much inventory before they have to start replenishing it, and that's gonna affect your EPS. So, and Q4 is always the best quarter. Q1 I think is usually the worst. So yeah, that's just that's a bit of ignorance to be upset about the financials for Q1. I think they're still good, much better than Q1 of last year, which is good to see, especially when the economy is in much worse position and people are spending a lot less. So yeah, I'm on the right track for sure. No, I'm bullish on the company. It looks good. Yeah, I mean, on hype alone, if there's news that RC's in barbecue, it'll be, yeah, without anything else, it could easily hit a couple bucks. But if it's, I mean, yeah, if it is true too, I mean, it'll continue to go. I don't, yeah. I'm taking the not for long tweet as a way to So yeah, it's either that or something else, Cameron. That's what I'm saying. He's either like a total dick, or he's using, or Matt Furlong's moved to one of RC's other projects, and I take it that he's moved on to Teddy or Bye Bye Baby or whatever other endeavor he's into, which is what makes me more bullish on barbecue, because I don't know what else to be bullish on that he'd be part of, and not necessarily just bullish fundamentally, but bullish for great price action. Potentially fundamentally. I mean, I think he's done a good job with GME, and I think he could do a good job with whatever company tries to take over. It seems like he is trying to kind of recover, revive these dying brick and mortar stores. So he started with GameStop, and it seems like he's going to probably be moving on to something else. We knew he had interest in barbecue, and it seems like his interest never went away. He did sell his shares, but maybe this, doesn't mean he lost his interest. Or maybe it's another, maybe it's Sears. I don't know. The final furlong, yeah, I saw that too. I'm not under the impression that visions clashed, or there was any ill will. I mean, even the filing had said it wasn't because of disagreements or whatever. So I definitely would have been, actually, if RC didn't tweet that. I would have thought, oh, he just didn't like him, wasn't doing a good job. I would have been stoked, be like, okay, cool, RC is now CEO of GME. That's great. Would have nothing to do with barbecue. Would have, not. I wouldn't have thought anything of barbecue. The fact that he tweeted that, though, right after, that, to me, that was like, okay, if he's he's using it for something else. So yeah. So you guys have to remember, RC did not want to be CEO. So I also think it's temporary. And I think he wouldn't have done it unless he needed to. And maybe it is for capital allocation, which I've seen. But being chairman of the board, I think he should have had no problem how they allocated their capital. But yeah, maybe it's for capital allocation to buy barbecue. But regardless, he said in that interview he does not want to be a CEO again. So that is not his desire. It's not like he wanted. I think it's temporary, and that's why even not for long. Like potentially even I don't know. He could be saying not for long, like the stock price is dipping because there's going to be bullish news on GME, and so it's going to rip back up. But I think it's that, but I think it's also directly talking about just Matt Furlong and how he's not going to be CEO anymore. But I think it could be both. Or maybe he will even return as CEO of GME. Yeah, I kind of didn't really read his resignation letter. Didn't really reply to your contract being up. Had long hair. Not for long. Nice. What did RC mean? Very good question, Kitty. It's really got to ponder that one. Sugup's contract's almost up and then for long come in once it's done. I don't know. But yeah. After losing Furlong and then him tweeting that, it gave me a little more conviction that RC is involved with barbecue. Because I don't have anything else, that I think he would be involved with. Involved with something else, and the only thing I know of that he has interest in, kind of in that realm, is barbecue. Like, yeah, whatever. He's a shareholder in Apple and Nordstrom's and Baba, but I don't think he's trying to kind of take over any of those or rebuild any of those. Like, they don't really need it. Nordstrom maybe, but not even. It's the family. It's like he can't make his way in there, and I don't even know, like, they're in kind of trouble. Oh, they're doing fine. Doing fine. Now we're getting this value rotation. Their stock price is ripping. Doing great. So this dip on barbecue, I think that's fake. I think we'll be right back up today. I think we're gonna hold that 2340 level still. What is the German saying? Germans are saying down 3.7. This has been weird though. German market's not been lining up at all. Yeah, I mean, I guess my speculation and my conviction that RC is involved with barbecue has grown since yesterday. That's it. Which I guess would make me more bullish on barbecue. Yeah. Root AMC. That's Ric Flair. Is it Mullen's down 14.5% yesterday. Yeah, Root was pretty nice. Hey, X-Ray, good morning. Mgall, is this Chinese? No, Fort Lauderdale. Direct consumer lifestyle brand. Oh, Messi's brand. Quite a move yesterday. Was this the one that... This was, the Manu? That related? Nice little bull flag there. One to watch for sure. GME still melting down, dude. 2002. The low tick was 1989. I'm not buying into GME yet. I think this could, yeah. I think we had our run. It wasn't a run though, because it was just, a fixed stock moving up with the rest of the index, and fired CEOs, and that's going to sell off. I would wait to buy in for sure. But just depends on how much you read into that tweet from Cohen. Maybe not for long means there's going to be some super bullish catalyst on GME in the next week, and it'll rip it right back up. We're still waiting for them to buy a used company, as they say. So that is definitely a potential catalyst for it to rally. All right, we've got about 10 minutes. what's going on here. Goldman Sachs is considering the sale of Ireland's largest shopping mall for less than the value they acquired it for just over 2 years ago. Crappy investment there, Goldman Sachs. TikTok seeks up to $20 billion in e-commerce business this year. That's insane. Pace of Fed funds rate. $2022, so we're... Oh, the 80s, it was faster? I thought this was like the fastest we've done. The 80s and the 70s were faster. Yeah, Volcker did just go crazy with it, I guess. Who was saying that this is the fastest we've done it? The fastest since the 70s, I guess. 80s. U.S. Supreme Court Justice Clarence Thomas received a 90-day extension for his 2022 financial disclosure. Mortgage applications for home purchases have fallen for a 4th week in a row. That is great news if you are bear on the housing market, especially being that we're now June. This is usually like the hottest. June? I mean, yeah, June. June might be the hottest month of the year for buying houses. April, May, yeah, I'd say probably June. In fact, they're still falling. Is good when the hottest time of the year. Approximately 35% of homes currently for sale are new construction compared to the historical norm of between 10 and 15. So maybe the home builders overbuilt too. I mean, I know there was like a shortage, but Lucid set to enter China market. With that $2 billion in cash they just raised off of shareholders' backs. Oh, was it 1.3? Might do well in China. I don't know. They definitely there's a market there for extremely fancy and expensive cars. Lionel Messi's move to enter Miami sends ticket prices soaring 1,000%. Oh, tickets to the games? Kim Kardashian, Floyd Mayweather, and Paul Pierce are not allowed to throw out the case that they deceptively promoted now defunct cryptocurrency. OpenAI CEO Sam Altman says he's not interested in taking the AI startup public because he wants to maintain full control over the technology as it becomes more powerful. He probably has no need to. They're gonna have a fundraising round, and it's gonna be valued something stupid high, and they'll probably easy raise the capital and don't need to go public then. Google and Meta are using bullying tactics against Canada news bill. Canadian Prime Minister Trudeau has said regarding proposed legislation designed to compel internet giants at Google, Meta's Facebook to negotiate commercial deals and pay publishers for their content. New home buyers are facing the least affordable market ever from the Mortgage Bankers Association. The list of digital tokens deemed as unregistered securities by the SEC now spans over 120 billion of crypto after the US agency's lawsuits against Binance and Coinbase. Yeah, I didn't like that. What was that Coinbase news? Yeah, dropped at 2%. Chipotle is ordering its corporate staff back in the office 4 days a week. Let's see. IP's up 2.6 pre-market. Pac West up a little bit. GME's down 22%. See where we go. See what happens with GME at open. I'm pretty curious on that. 1 minute. 1 minute. They just removed the deadline? That's weird. June 30th? I mean, you never know. His tweet said not for long, so maybe there's some news coming up that'll rip the stock price back up. That's why it's good to get time. But they're probably, depending on when you bought them and how far out of the money, they're probably not going to really be worth anything. Probably down like 80%. So there's not much reason to sell it. All right, we are open. Big volume on GME at open, 1.2 million. And GME's going up there a little bit. Barbecue is opening down here. Okay. So I half expected it to open up above 2340. Not a level I want to be below. %. 277 on barbecue is down 1%. See if that pops back up. GME's moving up a bit. Kind of had a trading range around between 21.5 or so down to 21 post in the extended hours. So see if it kind of gets back into that area. Jeff Brands is up 8. Carvana had a big rip up. They had earnings. BAOS is still up a bunch. Smile Direct. Fly's moving up. Barbecue moved up a little bit, 23 cents. Yeah, I mean, I don't think GME's gonna fill the gap right now. That would be pretty crazy. But yes, it is filling some of it, just with it moving up. 1 on GME. Down 19.5. BAOS is now halted. Barbecue 23 cents. Owls halted to the upside. XXII up 4.5. Chart's starting to look better. Yeah, this chart actually does look nice. An RSI divergence here. Back to that support level. No, that's not a divergence, I'm sorry. This is lower. Eyes moving up. It looks maybe alright. We'll see. I need to break this channel. That was like, what? A month worth of gains? I mean, given back here with that earnings, it was over a month worth of dropping that you recovered, went past with 1 day on earnings. Now it's the same deal to the other side. 2301 on barbecue. Wanted to start seeing them move up. Kind of end of this week. Maybe next week. BB's down 2%. Why? Coin kind of climbing back up. Gap down. There was some news that caused it. Oh, Pac West reversed. Down 2.4. The spread on these options are wide. Barbecue 2281. Carvana's coming down. GME's kind of hanging out there about 21. So 1940, remember this was our old historic big level. I'm thinking it'll maybe base out on that again. $19.40. That's from here. So might find support on there. Might not. Eyes moving up a little bit. So is GME. Barbecue 23 cents. I guess this is the time to buy barbecue. I just dropped below that level. Not what I wanted to see. Buys moving up. AI is ripping 2%. It looks like it's trying to keep this uptrend going. What? crazy. GME climbing up a little more here, 2185. Maybe he's tweeted not for long because he was planning to buy in today on the dip. And he knew that would cause it to rally. Because if he was talking about the stock price, the only reason that he would think they would go up would be either from a cycle, from him buying in and causing it to rally, or from a bullish news, if that's why he was tweeting that. So, the cycle, I'm not thinking. Bullish news is a possibility, or him buying. Hey, down a row, long time. Yeah, XXI looked good. It's a bit random, no question. I know, Pac West, it's kind of selling off a little bit here. Okay, though, it's had a big move the last week. I mean, if we start to see like price action to the upside on GME today, that's all I would imagine is insiders buying. Highs coming down here a little bit. IEP's down 2.5. Just some consolidation at this point still. Had quite the move. $21.71. He's down 16%. Pretty nice climb out of the lows there so far, though. That ain't bad. For long as it might have been horse trading. I'm just talking. How would that mean that, Cameron? Yeah, I mean, for sure, Don. I just don't think he's. I don't think he's like that, because that's kind of cruel. I mean, I definitely think he's trolling on Twitter a lot, but to type that after he fired his CEO, I don't think he would do that. Thumbs out of a job, not for long. Yeah, I know, that was my initial thought was he's going to be using him. He's moving on to Teddy. Something with Bed Bath. It would be very uncouth, but yeah. So that's why yeah, I definitely laughed about it yesterday when he tweeted that, and I was like thinking all different speculation what it could be, and like if it's nothing, that would be so hilarious if he's literally just giving him crap. I kind of hope it's that, just because that'd be the funniest. But no, I don't hope it's that, I guess. Bullish engulfing. Oh yeah, on the daily, yeah, for sure. Yep, I know. I'm looking for a short entry, most likely. After little handles maybe built on this inverse cup. We'll see. We'll see how high I can go before it gives us a sign. Signal. There's a new low on barbecue, 2261. Interesting. Yeah, it's hanging out below that support level. Not what I had in mind. $22.50. Little flush on the SPY there. There it goes. Let it out, SPY. Did grab the short. There's like a little head and shoulder here. Head, shoulder, shoulder. And then that just broke the neckline, so just look out for yesterday's low. See if it bounces there, or if I want to maybe try and hold these for a bit. But I think we do need to break this level. Otherwise, we might still be in some kind of bigger bull flag. Might get a retest and bounce around here. Then I move back up. Have to see. That's true, there's a gap too, huh? Oh, I don't have a gap actually. Oh yeah, we opened there. Not having any gaps. There's a break of yesterday's low. Wow. Barbecue too. Okay, coming down. 22.69. Down 1.5. I mean, it's not a big amount, but anything below here is big to me. 20 cents is like kind of the next level down on it. Define, I guess 22 cents could be a little level there. What retracement did this have? Kind of already had that. 41%. Yeah, maybe we're retesting that low there. Just 38%. So yeah, the retracement's like almost the same. So yeah, still, I mean, still looks bullish in the longer trend. My 2340 levels may be off. Yeah, GME holding up pretty well. Down 18%. Kind of trading in that extended hours range, like I was saying. Slightly on the bullish side, I guess. I don't see it really getting pulled around by SPY. I didn't before OTC either, honestly. If anything, it looked like it had inverse beta at times. Just wick down to pre-market there. What are the Qs doing? I actually have a little... Oh wow, the Qs are actually stronger. That's probably because it sold off way heavier yesterday. But I did start to build a MNQ short. I think this has got a long way to go down. With a big gap down there. Barbecue 22 on 3.5. Wayfair is up 6.5. GME is now below VWAP. Carvana ripped back up. Above VWAP. Up to its pre-market high maybe. RTZ up 15%. Wayfair 6%. Coin's kind of climbing back up a little bit. Pac West is still kind of selling off. Down 4% there. Two. 3.4 on barbecue. Maybe it looks like it's losing some steam. It sure hammers down the rats. Yeah, I know. Yeah, it broke that support. I was not expecting that. So the 22 cent even range to support this resistance, which would also be more consistent with the retrace we had on this rally. So we still could be repeating this same type of algo. Minus this bounce. Where was it? Even this one too, but this one I think was from that CNBC article. I rip back up there a bit. I guess it makes sense Nasdaq would be more bullish. Just initially, since yesterday it was way more weak. The spread on the indexes right now, the indices, is crazy. Okay, R2K is coming down too. Okay, that makes sense. I think the Qs will come down. It's just it was pretty bearish yesterday. Double down if it gets much lower. Yeah, I'd look at maybe 22 cents. That actually hit right at 22 cents, so somewhere around there. See if it bounces. Starts showing some support. We're at 22.12, so we're pretty much there now. They've all been removed? What? I think that's bullish. Let me did you share it? Did you share it? Let me see, did you put it in media? You put it in SPY new low there. There's 22 cents on barbecue. Can you share it on Discord? I don't have the link. 21.90. I kind of dancing around down here. Lower than yesterday's low. Whoa, there's a flush on barbecue. Alright. Alright, getting some Chapter 11 volatility in the OTC. You down with the OTC? Yeah, you know me. 7.5. They are dumping it. What is it, Thursday? Yeah, interesting. Flushy flush. They don't like all the hype and speculation on GME firing their CEO. They wanna snuff that out right away. Look at that morning volume on GameStop. 6.1 million? Dude, what? What is going on here? $0.21 down 8.7. Whew. Well, broke the 22 cents. Now we're looking at 20 cents. 17.90. I kind of moving up there a little bit. Ripping back up. $20.50 on barbecue, down 10%. Hit 2020 on barbecue. Wow, that SPY rip back to VWAP. Alright, let me see what you're looking at. Quick show all dates. Yeah, there's no dates on here. You just have a bunch of dates. We have this. You have June 14th. But you don't have, what, today's date? It's missing a lot of stuff, huh? What all is missing on here? Stalking horse? Dude, I don't know if that's good. What? Let's see. What all is missing? Stalking horse, auction deadline, bid deadline. It doesn't seem good that those dates are actually missing. Because now our next deadline is just final hearing on certain first day motions. And then the next deadline is sale hearing. What happened? Can't download the dockets anymore. I don't know why the dates wouldn't be on here. And is there a coincidence that the stock is just plummeting right now? Hmm. China #1. Yeah, Cameron's got it, David. That's like the floor price. Buy above VWAP here. Whoa, the rip. Rip on SPY. Nasdaq's up almost 0.5%. You mean hanging around 21? I'm not sure on the. I don't know on all the deadlines being removed. That's just strange. I've never looked at this though, so to me it's. I don't remember seeing anything different. I never saw it. Yeah, that's weird. Where did you first see that? Did you see a post saying it's removed, Cameron, or did you just were you just looking at it? Now we're getting kind of a bigger intraday inverse head, shoulder. Yeah, retested the low there. Ripping back up. 427.46. These kind of the first resistance there. Oh, I forgot 10 o'clock we had that manufacturing data. That caused the rip. Where was the data? I think that's what that rip was from. I'm not seeing any news on barbecue. Barbecue. Back down again. 2050. Down 11%. Weird, Cameron. I don't. That mixed with the stock dumping does not seem like good news. I mean, what could have possibly happened though? They just cancel everything, decide to liquidate. Son of faulty. Well, potentially they did update that section because they went from having it to not having it, so that's an update. Baus, 105%. Oh, Microvision's still holding up. Carvana, keep going. Yeah, I might have continuation. I don't know if it'll go much more today, but good earnings. Oftentimes you can see some continuations on those. But it has had pretty significant rally into earnings. Wasn't it earnings? They just had earnings? What's the... Oh, just a outlook. Wait, what? Revised profit outlook. Oh. They already had their earnings. Oh. Then I'm not as bullish that it keeps running on the fundamentals at least. I mean, looking at the chart, it's hitting basically the high from back here, so I would definitely wait before going along on that. Unless you're just looking for intraday scalp trades or something. And just wait for this to swoop back up and make money. Barbecue 2021. We're at 10:15. It's been open about 45 minutes. We're at 20 likes. Thank you guys for your thumbs up. I appreciate it. Trying to get a handle on what's going on here. Between GME and now barbecue dumping and potentially missing the deadlines for stuff on the website. I don't know. Never saw the June 8th date on there before. Yeah, I don't know. I've not looked at that website before, but some are saying that they did used to have all the other deadlines, which would make sense that they would. They would just have some deadlines and not all of them. So why would they get rid of that? New low there on barbecue. Like someone knows something. $50. Huh. Down 15%. I mean, something I think is going on. Dang it. Doesn't seem good. What is dumping in fear of the stalking horse? I don't know. I don't like it though. Bigger the better. Carvana, yeah, they came out with a positive outlook on their profit the second quarter, so it's moving on that. It's right near resistance, so it depends on your plan with it. If you want to go long or go short, or what your plan is. I would like it to break this resistance before it looked too bullish. You know, it's a pretty big level there, that 1980. So might move up to there though. Could move up and maybe break it a little bit, but then not like fully break it, just kind of a false breakout. But I would not be going long at this point. The time to go long was back here and we were charting it. We were seeing all this stuff go on with it. Doing cash cleared puts. And then once it got up here, I started to not like it because of this RSI divergence. And I think it probably would have come down, but then they came out this news, so it gapped up. So yeah, here we are. It's not a bad thought. 14th. A bad thought on how it works. Easy play or lost? No play is the easiest play. You don't lose money. Just watch and learn and paper trade. Don't force it. Take it slow. Market's kind of at a lofty spot, and I think the whole thing is going to start turning around. So unless you're comfortable going short or playing inverse ETF or something, be patient. $50 it hit. Yeah, that 2340 level is, I mean, you can see like that was a big break. We've come down so far from there now. No, I have not seen any news. It has been pointed out that some of the deadlines on the Kroll website aren't there anymore. I never saw it before that they were there, but you can see now that there's no like stalking horse bid deadline. They got rid of a lot of the deadlines, just potentially, if they were ever there. But it seems like they probably would have been. The news is barbecue's on sale, baby. Big double doji on SPY there. Might be the top. Let's look at that. 1934. Volkswagen your here image. Yeah, this is this. I like 14th's point about that though, with the anxious, and that can be, but there's also times when intuition is right. That 2340 level, you can see that was definitely a big level because we just flushed after we broke that. I thought yesterday's little rip down to that was kind of it was like 2 transactions down there. I for sure would be gapping up above that. And we just started hanging out, and sure enough, hanging out below support. Alright, I'm kind of adding to some shorts up here. Oh, man. GME is hanging around 21. Carvana going up again. Yep, Carvana's retesting. It breaks. It's trying to break this level, 1987. Let's see a big break there, and then it retesting, using that as support. So coming up somewhere, using this as support, and to grab it once this is a support, basically. Or you could of course play the breakout and then just Try and time the market there. SPY is ripping up here too. Wow. A move on SPY. Firm's up 4%. So SPY kind of hitting that level we have there. Volume today on barbecue 2 is pretty high. Not like GME's though. GME is extremely high. Already at 8.3 million. That's crazy. That's just engulfing all the other volumes other than yesterday. Already, and we're only an hour into the day. SPY ripping up there a bit. Oh, big rejection there. So choppy this morning. Wait, nope. I'll probably get some, gotta queue up for some daily SPY puts. Futures I can be a little more sloppy with my entries, as I only need it to come below my price. I'm not getting theta decay. But the options have got to be a little more precise with an entry and an exit. Oh, another lesson. You take profits. Had it here. We had it nailed. Like a nice bull flag. broke. Also at a resistance. A lot of reasons to take profit. Even Tree said it in chat. It's like, take profits. I'm like, yeah. $18.47. Wow, down 15%. Move their bid deadlines. What? New high there, 427.46. I mean, I've been trading it, so it doesn't just happen. It goes up, not just up. It goes up. So nice, Kala. Well done. Wow, SPY ripping there. So 427.75. Yeah. Yeah, but see how Carvana's rejecting that? If I say, like, if you're just looking for intraday scalp, sure, grab it, have fun. But for it to really sustain this level, if you get much more upside, I think it has to break this level and then use it as support still. And then, yeah, maybe you're looking at a nice move. But otherwise, to buy after it's ripped up so much is just, you know, you have to be looking at something like this as a scalp, not as a momentum trade, because you've missed the momentum. It's gone. Now it could continue, but for it to continue, you want those indicators to confirm that it's going to continue, and then maybe, yeah, you'd see 32 or 43. You know, I mean, just unlimited upside. There's a gap to fill up, but they're at 24.8. That breaks 8.10. Yeah, I think you go up a little bit more. And the high back here is 8.24, so could move up a little more. Could we move up past that a little bit? Doesn't mean it's going to fully break out, but got 8.50. Somewhere between 8 and like 8.55, 8.60, I'd say. Could move to. Sure. Coming down a bit. It's below VWAP. IP bounced back up. Bounced off of that 26.19 area. Back up to VWAP. Down 1.2. Back west down 6.25. maybe 0.9. Up 1.3. Setting up an engulfing candle here on the 5-minute. Barbecue. Bear flagging heavy down here. Not an engulfing candle. More pack west. Cash secured puts. It's tempting. Terms up 4.3. Prop MPW. Good looking chart. Head and shoulders there on space, maybe on the daily. Mars just hopping around. Happened to HCP. Earnings. Yo's earnings tomorrow. That head and shoulders on Peloton. Held the neckline though. Lords, today you can be sad. I think, I don't know. It's just down. I don't know if there's anything fundamentally different. Seems weird. Very weird. Starting to build a little position in daily SPY puts. See a little head and shoulders here on the 5-minute. I suppose also at a resistance. Alright, first little green candle really on barbecue. 1930. Looks like that might be the bottom. Wow. I don't know. I'm moving up more. It still has Stalking Horse deadline on here. It's weird that it's not listed under the dates, but it's still on here. Right here. So you have, this is just under the case info, all the text. You just have to go down to dates and hit show all dates. Which, yeah, great. Maybe it's not there anymore. I'm not sure if it ever was, but not like they've removed it. It's still on here. Sale. Stalking Horse deadline, still June 8th. It shows today at 5. Notice of potentially assumed contracts and unexpired leases, June 9th. Final bid deadline still has all that stuff on here. Notice of successful bidder as soon as reasonably practicable. 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 But that word doesn't make any sense to me right now.
Practicable.
Practicable. So weird. As soon as reasonably practicable after the conclusion of the auction, if necessary. Sale objection deadline, June 21st. Sale hearing. So it's all still in there. I don't know what this dumpy dump on barbecue was. Red degree with the doji daily candle. We might. SPY's ripping up more, up 0.25% now. Look at these candles. These candles this morning are wild on the SPY. Just big wicks and gnarly. Practicable. $0.20 back there on barbecue. All right, next resistance up here, 427.75. Might be it. I'm happy to see that they didn't remove it on the website. Practicable. It's just so many syllables. Just not really gonna mess with Crept Wall Street again. I mean, I think it's unlikely, but yeah, that wouldn't be good. Bye, rip, rally. What's pushing right now? We got banks or? Coin's up 1.3, that's not bad. Back West having a bit of a bounce. AP bounced back up. Good. This was down pretty good, wasn't it? This down 6%. Intraday ranges on, or no, it was Pac West. That's Pac West. Upstart. The daily candles on Upstart have been insane. It's still on there. So what Cameron had me look at was down here under dates and then hit show all dates, and supposedly it used to be down here and it's not now. But I don't know. I can't confirm that. I never saw it. However, it is still up here under, under the important information, dates and deadlines to file claims. It's all still here. So under the sale, stocking horse deadline June 8th, final bid deadline June 14th, notice of successful bidder as soon as reasonably practicable after the conclusion of the auction. As soon as reasonably practicable after the conclusion of the auction. Sale objection deadline June 21st, sale hearing June 23rd. So not all those are down here. I guess you do have sale. Let's see, June 14th, June 23rd, June 14th, and June 5th. They have the 23rd. They don't have the 14th. Oh, they do have the 14th. Oh, the 21st. No, so they don't have the 21st on here. Or the 8th. Yeah, the 8th and the 21st. So what's not on those dates down there for whatever reason is the stalking horse deadline, which is today, and the sale objection deadline, which is the 21st. They're still up here, but for some reason I don't know. They're not down here. I don't know if they ever were, but not right now. Barbecue's bouncing back up there to VWAP. VWAP is now quite low though. The 2340 level, I mean, you can see how that was a serious level. You've just blushed under there, fortunately. You're welcome for that practicable information. Stalking Cohen. I'm believing more the sentiment that Cohen's in it. You're welcome for that practicable analysis. I'm reading very well. Say practicable out loud just once. And have you ever used that word? No. I'm just gonna say practicable. That sounds much better. Barbecue. Hey, Seaman, you called it. Red to green. Mikey, I think last time you actually said that, we actually had that. We had a big red to green day on barbecue. Coin's still climbing up, filling this gap. Need above 55. I have until July, I guess, July monthlies, but yeah, not the best time to enter cash cleared puts. Maybe you could average down on it. I just don't want to. %2 on coin. I should have averaged down. Dang, when that news came out though on it, I was like, oh boy, this is gonna be really bad. Hard to show support, but you know, you kind of have to throw TA out a bit to get a news moving the stock, but you didn't have to completely because this was kind of at a support where it dropped to. But if I had averaged down then, I'd be well green at this point because we were down like 150, 200%. I could have literally doubled down. What I did with Neo and got out. Nirvana. I kind of rejecting that breakout. Hey Jack. You should buy. Lords, this is cheaper than I thought I was gonna get, so you know, hit 19 cents this morning. Fucking donkey. Listen to Coke when your parents were little. 25% between friends. But you were scaling in, remember? You were buying some yesterday and then some later this week. Remember? Talked about it, Lords. Said you're gonna scale in. The reason why that works, you get a good average. Don't know what the future will bring. That SPY's breaking through that resistance. Barbecue rejecting the break on VWAP. Nasdaq's up almost a whole percent. Rallying 427.91. Up is up 7%. Oh, today was a reverse split day. Interesting it actually rallying today from that. Or in light of that. Yeah, the volume on GME is insane. It was crazy yesterday. It's even more crazy today. I know. I don't know what's going on with it. Oh, what my puts would have been? Let me see. Probably nothing crazy. I would have sold them at open. Good lesson for you guys. When you get a huge move after hours, you usually want to sell your options near the open. They would have gone to 50 cents. Yeah, nothing crazy. So I was getting them yesterday for 13 cents. They would have gone up to 50. But now they're back below. Now they're at 4 cents. Not crazy. You literally would have had to sell them at open. Yeah, GME chart does look all messed up. What's the price action? Still moving up. In Detroit, a typical home is 24% less expensive to buy than rent. I remember it was like that around 2008. Really for a long time, actually. Up until maybe like 2019, 2018. You mean just dance around its extended hours range. Now 19%, 2103. AP is now green on the day. Back West still down 4.8. It looks like it might not want to have a rip day. Gap Philly. Out of the 25 largest cities in the US, only St. Louis, Detroit, Chicago, and Baltimore qualify as affordable. Those are like the 5 sketchiest cities. 4. 43.5% of older millennials aged 36 to 41 had a student debt balance of $20,000 or less. The highest paying jobs are being posted with the widest salary ranges. Usage of the US dollar as a reserve currency is on the decline. Jobless claims increases more than expected to their highest since October 2021. Yeah, Neo's earnings are tomorrow, that's right. Had a pretty nice run. Not really. Not what I'd hoped, but we'll see. Didn't they already come out with like some really bullish projections? Yeah, I thought they already even had earnings. Oh, looking at car sales in China. Let's see. Car passenger. Yeah, MVIS looked like it was just kind of consolidating, which is crazy. Rallying back up a little bit. Could be another big day on Mavis. We'll see. I mean, what was it yesterday? It was down like 10% and then ended up ripping. But yeah, it looks like more like it's consolidating. Volume's getting out of control on it. All right. San Francisco is a mess. One of the city's largest hotel. Not making payments. You don't have to pay for stuff in California. Everybody knows that. GME staying below VWAP for now. Did get a little spike up above it though. Barbecue hanging out below VWAP. Has moved up to it. See. Scanner. Firm's up 7.5. Overcurve still dumping. Nirvana hanging out below that resistance. There you go, barbecue. Pump through VWAP. Your dip has been confirmed. Barbecue 21.18 down 8%. Up is up 10.25. Blanter is up 5.8. Maybe a little head and shoulders being built here on the 5-minute on SPY. Just looking at some banks here. The ones with the highest insider buying. You really don't have that high of IV on these banks I'm looking at here. Interesting. Sort of like Pac West in these. Maybe he's way higher. Ah, still climbing up. Barbecue. It's only down 4% now. Very strange dip this morning. 22 cents. Cameron, they already have, not just San Francisco, but most of California. They've had a net outflow of residents for years. New high of the day there on SPY. Wow. Liquidate GME until it's GMEQ. You should. That'd be way better. OTC markets way less corrupt. High frequency trading, no payment for order flow. Not as many dark pools. Not as much Wall Street on it. Yeah, that is with a nice bit of volume there on barbecue also. Yeah, I bet Tesla's pumping with this. Dang, Tesla's up 3.5. 23.7 or 237.40. Yep, I wouldn't have played it until I would have only gotten a little bit of this move if I was looking at it. I think, unless it just keeps going, but up to another little resistance here. Nice Archer, hopefully it's treating you well, man. PFC. I don't know anything about this bank, but I'm just looking for some banks for cash secured puts on. IV is pretty low on this like the other ones. Chart looks nice, so it looks bullish. I think it's setting up a big kind of inverse head and shoulders here. I know, I didn't have anything to buy on that dip. But, oh well. Interesting how it coincided with people coming out with stuff about them taking off deadlines on the website and all that. All that. Why is Pac West IV so high? Market makers must be pricing in it going under or something. GME hanging around VWAP there, 2118.
Here in Hawaii, our ocean is either going
I'm not sure about iPath. Assuming like just holding companies, something. Gas lead index. I don't know. Don't care to waste my time trying to figure it out either. You can research it though. I mean, are you looking to do something with it? $11.20. We've got 10 minutes to EU close. Might get a turnaround on the market at that time. European close is kind of a turning point for our stock market. We're at 24 likes. Pretty pitiful on the day. Pretty pitiful, especially when you guys are learning English, like practicable and how to say it. It's appalling, really. But anyway, thanks for those 24. Barbecue moved back up to 22 cents. Back down to VWAP now. Bounced off of pretty good volume this morning on it. Not like GME though. GME has crazy volume. Speaking of, it's also above VWAP now. So you might get a more bullish move here on GME today. Then maybe 2187. Let's see. Actually, we already kind of hit that. Yeah, maybe move back up to the high of the day, I guess. Here, 2323. Possible. E down 0.85. Back West down 4.25. AI up 1. World down 1.25. Biddable and indefensible. Like to viewing ration. I think you meant to say ratio, but I like ration also.
The ego on you.
Hey, the ego's on you. Thanks, Fire Marshal Bill. Thanks for your gifted membership, buddy. Juan Torres. It was not Polt that gifted you that membership. I want you clear on that. However, come thank Papa Ace for the gift. And jump on our Discord if you're not. DM me for the Happy Crew roll. I think you're on there though. It would be a pitiful outrage if you weren't though. At $5, yeah. Without a buyer, maybe not $5. No, I could see it back to $1 even without any buyers making offers at that price, or valuing it that at least. See the final by tomorrow. It's good info, DIY. That'd be nice. That would be nice. It'd be nice if it's not like 100 million for it either. Bring our market cap up 3 million from where we are right now. We just dropped below 100 million. Actually, that's crazy. That did not pull. I thought you were playing that off. What happened? That was a fun game. I could tell everyone that Pulte was a frequenter of my stream. GME's moving up. Cool, I think we got to retest the high and maybe some more gap fill today. 23, 23 even. The volume today on GME is pretty wild. We're at 11.6 million in this hour. No, that's 4 hours. Yeah, that's today. 11.6. That's crazy. Yesterday's total volume is 18. Today we're at 12.1. Whew. Maybe the not for long was the stock price. I don't know how Ryan Cohn would know that. Maybe from some sort of cycle or rollover, or he's buying in. But I think it's more than just that, even if it is that. Because I don't think he would do that for long. If he wasn't, I don't know. No, I don't think he would. Jimmy popped this morning. Yeah. Kind of been dancing around. I mean, it's still in the range it was extended hours. It's just a pretty large range, so. Just retesting the high or maybe even breaking that. With all this volume, I mean, Jimmy can do stuff. It's not like squeeze or anything, but it's definitely moving with a lot of liquidity. Yeah, I heard that he was on Morant's. There you go, Juan. Way to be a man. And thank your fellow chat friend. Hit the enter key with a flourish. Yeah, that happens to me all the time, hitting keys with flourish. Renegotiate their full debt. Above 1 billion, I think will be good. Yeah, it could have been a little voice, a voice bot. That's true. He gives less than me. Oh, dang! That is totally what Pulte would say. It's totally a Pult thing to say. Classic, cocky, classic. Holds no barbecue. I heard that. Yeah, I'm not surprised. I mean, we know he holds GME. He's not said he's bought any barbecue. It's just been people speculating. Happy Thursday to you too, Daniel. Happy Thirsty Thursday. Oh, sorry. Sorry. You're booming, David. New high of the day there on SPY. Not done yet. About 88% of all global foreign exchange transactions, even those not involving the US or US companies, are in dollars, according to the most recent data from the Bank for International Settlements. I slowly climbing with G. 428.45, I would say. There's another resistance. We'll see. That is the top. Come on. 74. Got options. Stop, a little false break. Best liquidity. Those making a salary of $250,000 in Portland pay over $100,000 in taxes. All right. Was making a salary of 250,000 in Portland, pay over 100,000 in taxes. Sorry. Up did reverse split, yeah. Did they reverse split today actually, which is interesting. That usually the reaction is pretty bearish. It still has this RSI divergence. It's made a third one now. So that is neat. Chart still looks good. Come on. Up down nearly 19% on pace for the largest percent decrease since June 2021. Good time to buy. Is that an article you're reading, or is that just look for stocks that are down a bunch to think that they're a good time to buy? Also up a lot last month. Barbecued, retesting below VWAP there. Oh, on Newswire? Interesting. This Tingo group deck. They have bad earnings or something? Too bad. What? Oh, Hindenburg's going after them. Uh-huh. Crazy. Do you see the amount of pull they have in the market? It's just wild. Yeah, it's all from Hindenburg. I'm gonna read. Tingo Group says financial institutions raising money for company without permission. Good. Hindenburg didn't start going after them till they had some bad news come out before that, I think. 2 days ago. It's probably pretty credible short that they have on them. I think they're into some shady stuff. You can't demand a gift. GME coming back down to VWAP. Barbecue hanging out above VWAP. I watched half of John Wick last night. Like over 2.5 hours. So I do it in 2 parts. Give you guys an idea of how much time I have to watch stuff on a screen. Or lack of time, rather. At least something like that. I don't think kids watching that, so. Yeah, movie time with the wife is. We usually don't have 3 hours, so 2 parts. 2 parts isn't bad for a movie like that. It's like just action scene to action scene. But the first half's actually pretty good. Yeah, I mean the movie, it's got tons of good ratings. So
they have the partnership and they can offer you much better hyperscale kind of environment to run large language model. And in fact, today we saw that even they invested with one private company.
Yeah, 10 to 1. 3, I have to say.
They're running large language model. So all these workloads we think will come to.
I knew you were right, but I just wanted to deny it.
So definitely AI
said I should take profits. Once his bull flag broke, and I said, well, if you're trading it, this is the time. Or whatever I said. I said, this is a break to the downside. Not bullish anymore. Said take profits. I'm like, yeah, I could. I don't know if you remember that. I was like, yeah, maybe. I could, whatever. I'll hold it. Ah, you were right. You were that little bird on my shoulder. Little rational bird. So, thank you for that, sir. Yeah, I'm watching on TV. I don't watch movies on my computer. Not 18 anymore. Kitty daddy. In a dorm. In an RV. Someone's couch. I got big screen now, baby. Woo! Carvana moving back up a bit. In cities like Houston, Tampa, and Nashville, someone earning 250K could see a lower tax rate than those making 100,000 in cities like Baltimore and Philadelphia. New York and San Francisco, a 250,000 salary has a purchasing power of only about 83,000. Oh, geez. After accounting for taxes and adjusting the remaining amount for the local cost of living. Yep, $250,000 is almost poverty level in California. Well, San Francisco.
platforms. But when you think about artificial intelligence, everyone thinks about text and, of course, coding. But in reality, there's a whole other ecosystem behind artificial intelligence, from text to creation of digital images. And if you think about
You were right. I just used your list.
which is now
Thanks,
implementing
Tree.
artificial intelligence for content creators.
Yeah. I mean, I guess yeah, but I need people to tell me that in the moment because
everybody's talking
hard,
about
of
that as an
course.
AI stock. Their
Read.
discrete
Read gets
graphics
to me.
processing chips are effectively utilized for creating high-end images, and that's what Adobe does in their.
If you are
business.
pollute,
So
pollute.
they actually recently talked about some new technologies.
Yeah, I don't know what
Associated with
Pac West.
content creation
Little rip rally there. That's
utilizing
nice.
artificial intelligence. And as a result, we're actually seeing a couple of nice upgrades on the stock today. Piper Sandler and
Very
Deutsche Bank, both
nice.
of these companies increased their price target
Pretty
respectively
volatile
to
intraday.
$500 from about
Airbnb
$415
down
from
0.5%.
Piper Sandler, and also about $430
Coins up 2%.
for Deutsche Bank.
Okay.
And I think this is a situation where Adobe,
IP almost
within the
green.
last year or so, is actually underperforming the S&P 500. Might be sort of a sort of hidden.
Yeah, it's
gem
pretty
when it
nice,
comes
Cameron.
down to the
When I
artificial
moved from one part of the
intelligence,
country to another,
hype that we're
it
actually
was
seeing
like
right now. Adobe
moving from the United
actually
States
a real business. It has
almost
a
to
lot of
like a
liquidity.
third world country,
It's not trading at a very
just
high
based on
multiple,
like
around 25 times earnings. And they're actually going to be reporting earnings
cost of
next
living
week, so
and
this is something you want to consider as well if you're taking on a new
the
investment in the
phrase
stock. And they're expecting, from the
quality
standpoint
of life.
earnings per share, an increase of about 13%
It was crazy.
year over year, and
Countries
revenue with an increase of
just
expectation
grown in
of about 5%
diversity.
year over year.
All right. So that being said, at this point now, in the hot, moniker with AI, what's the example trade for us today?
I had to torrent flash. I said, wait, I own a big TV with stereo.
You have to consider that when
Yeah, totally.
buying a new trade. So what we can do here is, if you look at the trends in Adobe, they're slowly inching to the upside.
1.2 mil is poor.
Overall,
Jeez.
looking at the earnings per share.
Yeah, I mean we've read it. I mean we've heard it here on the channel. Like people living paycheck to paycheck that make over 6 figures, like solid 6 figures annually, and literally scraping by. I mean that's also because Americans are in general extremely irresponsible with money. More so that than anything else, but that said, the cost of living in those places is outrageous.
We're going to go out and buy the July $415 call option.
Still super hazy in New York, I guess.
Structure with 2 different time expirations. It would cost a trader about $30 a share or $3,000 a contract.
It's starting to look like it's starting to taper a little bit up here.
Stay below 460.
Yeah, R. Good one. Good one, Tree.
And if that does happen,
Nice. Yeah, you're getting up towards that resistance.
Will expire. And then, of
Good
course,
spot to take some profits.
contract would be
Well played, sir.
Unlimited potential profitability. So if you feel like the stock is going to continue past 460 when the company reports next Thursday, then between now and, of course, next Thursday, you could certainly close that short call position, and then, of course, leave that long call for July unencumbered.
I like it. I like how you played it out because of the earnings in a longer fashion, in a dual fashion. George Sillis, thank you. Good to see you. Coming up next, 360 Round will break down today's jobless claims, the data, what we need to know about the overall state of the labor market. Of course, next week is the big Fed meeting. What are you thinking? Hawkish pause or something else? Trading 360. We'll be right back.
Ah. Buy's coming down a bit there. See if this is just consolidating or if we're actually into the top here. Barbecue 2097 down 8.9 around VWAP. Me just trading this range still. ADX. Whoa, yeah, man. When you get into IDX, I know we've looked at it a couple times from you and a couple other people. Highs coming down a bit here. Got an engulfing candle there on the 5-minute. Little head and shoulders being built there too. MACD just flipped. See if that holds. Or if we're just consolidating a bit. Could see a big green to red, like green to very red day today, I think. See those lower highs. On your calls, nice. Oh, there you got the breakout. Nice. The breakout on Carvana. All right, now you want to see if you can use that for support, or if this is just a false breakout. But yeah, break of that level. I mean, that's a big level to break, really. Tested it multiple times back here also. Put a little line at that gap fill. There. Isn't necessarily a support or resistance, but the point where I'd probably like to gravitate towards. Oh, looky back here. Highs consolidating after all, but it's probably, we'll see if it's tapering or not. More consolidating before another high, like higher. I make a double top. I make a little inverse cup and handle. I just make a little head and shoulders. A bear flag. It also look like a head and shoulders. You won. You did. You won today on Carvana. Come back again tomorrow to give it back with interest. Small Main Street city. Yeah. Yeah, those are you don't have any family or specific place to be. Picking it straight out of whatever cost of living. Small city on a main street or near a small downtown. Yeah, SMX did drop. I don't know. I mean, this stock is it has SEC matters in the name. So, I mean, you know, what the heck is it really? It's right at that support. You want to gamble on it. I mean, this is, you could start buying in here and then set your stop for break of that level. But I mean, it could do a false break. You've got a little bit more room to go. Not to say it'll go all the way down to that level, but you're here. Yeah, you can start buying in here and then just set your stops for somewhere under that support break. They have an offering or something. Receipt of NASDAQ listing notice. What is this? I might want to look into the news on it first. Registration statement for certain foreign private issuers. Notice of effectiveness. You have a prospectus you could look at. Receive NASDAQ listing notice. The delinquency and it's preparing a plan to regain compliance. So they got a delisting notice on the NASDAQ. I'm assuming once they drop below $1, but that seems awful fast. And it looks like them dropping below $1 was from that news, so maybe they're getting a delisting warning from something else, which would probably be worse. SPY was just consolidating there for a bit. See if we get double top or continue our rally. She was holding high on this high volume, high pressure. Yeah, no, I agree. I agree. Decor. It is holding up pretty well. Volume is solid today. Shareholder meeting next week. Yep. Might be getting a double top on SPY here. Oh. Some of the negativity. I don't. What were? Did it? I don't even. Did it miss analyst expectations, or was that basically expectations? I know they were expecting negative EPS. I thought it basically hit right on expectations for analysts. So. True, Cameron. Yeah, micro brews and find those in all sort of mid-sized towns nowadays. American Dream's going on in Mexico. Pulte, not Pulte, confirmed. Tasty John. Hit expectation. Yeah, I thought it's because it's like negative 17 EPS. I don't know on like revenue and stuff, but I think it was close on that too. It's always kind of interesting. But I think that's still, I mean, it's still good. Like year over year, it's still big improvement. And considering the market where it's at this year compared to last year, just like the economy in general, much less spending, you know, we're in a much worse scenario. So, but with GameStop, it plays into game releases, console releases, also. So I don't know if that's a factor or not with the last year over year. Reality is bearish. It's reality, man. Reality. Airbnb almost green. 7. I like that little pump on Pac West, but what happened? It moves. Pretty crazy. There you go, Spy. It was a double top. You can do it. I got another engulfing candle in the 5-minute. MACD did flip bearish in the last 5 minutes. Still hanging around the 9 moving average though. See if we get kind of a shoulder over here on this shoulder. Here, a little shoulder. Grab your short. Or here. Barbecue, on the other hand, had a nice bounce, but not a full rebound. So, not the best of looks. I was actually hoping for a full rebound up above that 2340. Day's still not over. It's only 12 o'clock. But otherwise, yeah, kind of a bear flag being built on it. Let's see. The spread on these puts on Pac West. See Carvana. You say 24.93. Yeah, I mean there's some softer resistance levels before there. It still hasn't tested the breakout, so which it doesn't have to, but yeah, let's see. So 22.91, kind of a resistance from back here, this range, kind of 22.16, 22.91. Yeah, I would just start looking for kind of reversal patterns. Engulfing candles, head and shoulders. Inverted cups and handles. Double tops. You know, that sort of thing. But yeah, it looks good. It broke out. It did well. Had nice volume there. Confirmed it. Well done, guys. Hope you're doing well on it. Up there, it's busting out again. So I mean that is a big level. Like I was saying, a big resistance level. Wow, look at SPY. So to break that's pretty legit. There's a gap fill. Not higher. Gap fill up there like 26. Like this area. Close to 30. Just wicking down there. Now I might be making that head and shoulders. That bigger one. $50K is pretty small. That's definitely, yeah, it's definitely small town. Small town vibes. I'm supposed to like Carl Icahn or short IP. You're supposed to love him and buy his stock. It might have been just, yeah, I think it's still kind of slowing down. Pretty much set on my positions already, or I'd be adding. Wayfair is up 8%. Feels up 3.5%. Wayfair looked nice. We had cash cleared puts on this for some of this rally. They had decayed enough, there's no reason to keep holding them. But yeah, buying calls, and that would have been great. Funny, a lot of these cash cleared put plays I'm doing are good, but they're volatile enough stocks that actually having like a long play on them would have been much better, I guess. Not as safe, of course. Ditch fixed. They have earnings? Yes. And I
yeah, definitely, and I think the market agrees with you today. We'll continue.
And they told me to run, so I ran.
Senior markets correspondent here on the network, breaking that down. But now let's bring in my co-host for the day, and that's going to be Nathan Peterson. He's director of.
He had like a deeper voice.
Center for Financial Research. Nathan, it's been a week so far for equities. Kind of like we're in wait and see mode, but getting in a little nice little boost here today. What's your takeaway?
Boosty boost.
Good morning, guys. It has been an interesting week. You know, what sticks out to me is on the technology side. So if you come into yesterday and looked at the NDX, you would see that we were at a 77 RSI towards the open there. That's the highest RSI since you go back to November of 21 when it was 78 before we got the subsequent tech sell-off. And then if you go to
Qs are right at that resistance also, setting up that nice head and shoulders.
Two-day 10%
The head and shoulders.
I'm just calling out those data points just to give you a sense of when you get an index like this, to get that high on the RSI, I think you got to be mindful of that we may be at a point where we're going to get some near-term consolidation from this recent boom that we've seen. And it's funny, if you look at a number of the signs that we got, if you look at Apple hit a new all-time high and then does a bearish engulfing candle on its worldwide developer conference on Monday, and then you see the RSI that's happening there, and then there was a decent-sized pullback yesterday.
There it goes. Let it out, market. Let it out. Nice big swooping.
Amazon, those types of names. But today we're up. But if you look at the historical RSI, history would suggest there's likely perhaps a little bit more to this consolidation move within tech.
I don't like how barbecue's actually hanging out down here at all.
To some of these other sectors like the industrials.
GME's coming back down to VWAP.
Rotational money, but I think if you're in tech,
yeah, that's not
VIX new 52-week low. That's
not good.
Sticking out to me this week.
Yeah, definitely. We're going to continue to watch that. Alex, if you saw the reaction after initial jobless claims, as I mentioned, the highest number since October of 2021, you know, that kind of feeds into the narrative that we need these numbers to do that. So the Fed maybe stops hiking at this point. And you saw immediate reaction in the CME FedWatch tool where, hey, those odds for a 25 basis point hike next week are going out the window at this point.
Yeah, I think this is where you can get into the weeds and maybe come to the wrong conclusion, because we maybe need to see some signs of economic stress to get the Fed to stop their monetary policy tightening. Might bring some optimism to the NASDAQ temporarily. If you were given two choices, and in what you've laid out here, you're essentially saying that one is a little bit tighter monetary policy fighting inflation, or the other a potential recession and working towards that and seeing it come up in the data. I think you take the Fed. You kind of know the devil you know as opposed to the devil you don't know. We don't want to see a deflationary economy and deflationary prices. That is a much bigger problem than inflation. Not to say inflation isn't a problem, and not to say that higher rates can't weigh on risk assets and risk appetite. But there's a reason 2008, 2009 is something you hear about and read about, and it wasn't because of inflation.
Yeah, it definitely wasn't due to inflation at all during those periods. But Nathan, when you look at, you mentioned the NASDAQ's up 32% so far this year. The S&P 500 up 11. Starting to see a pullback in the Russell. Now they're playing catch up with each other, it seems like at this point. But when you look at this as an investor or trader in this type of environment where you got the VIX down near 14 at basically 3.5-year lows, that hey, maybe it's okay, and what the Fed has done has actually fixed the problem. We had some data out of the New York Fed, the MCT multivariate core trend data tracking inflationary numbers, and those are starting to show some declines across the 17 major metropolitan areas. Is that a good sign here for equities where, hey, it seems like risk on is the theme today?
Yeah, and not just today. That's been the recent theme. It's as if the market is saying, go to the Bloomberg probabilities. We got 30% for next week, and then that's followed by 45%, which would tell you, and then it's followed by, small probabilities of cuts when you get into September, which suggests that they're basically saying, hey, the Fed has beat inflation, the victory flag is waved, and all is well. They're done raising rates. This economy's hanging in there, so it looks like a no landing type scenario. But in order to do that, you would have to be pretty comfortable with, A, we're at a full valuation with a forward PE of 19 on the S&P 500. The VIX seems very comfortable down at, the 3.5-year lows like you suggested. You'd have to ignore that we've got the leading indicators 13 months in a row that's negative. You'd have to ignore that credit card debt is at a record high and that, excess savings is going down. So if you're in a market like this and you're looking at a lot of this money flow that's come in, especially to some of those beaten down type sectors, as we've seen in the Russell, as we've seen even retail, they've been throwing some money there. But if you're taking all this into consideration, what could go wrong? Well, you have to be mindful of the Fed. They could be a little bit more hawkish next week than what many are anticipating. And we saw with the Bank of Canada earlier this week that they did a surprise rate hike there. So is that a prequel to something that the Fed might do? And if so, is this going to surprise the market, which could be a risk going forward?
Yeah, and not only Bank of Canada, Bank of Australia also with the hike earlier this week, Alex, and that was kind of unexpected. But then you start looking at supply chain issues. Now, there's been reports that boats are starting to stack up on the West Coast again. They're having labor issues. That might, recede some of those inflationary pressures at this point. But then you look at Japan. We got the Bank of Japan up there. They're still negative. They're still dovish over there. And their market's outperforming everybody across the board this year. So maybe if the Fed does pause next week, maybe it's warranted because some of the outlying inflationary data underneath is starting to wane a little bit.
Also, the lag effects of interest rates, the fact that it's on a downwards trajectory already in terms of inflation. Might not be at their goal, but it's certainly working there. 5-year break-evens were at like 2% on my last check, although that wasn't like the last week. It wasn't super timely. I look at things like crude oil. Okay, crude oil continues to go down, yet we keep getting supply cuts out of OPEC and producing nations. So much of this soft landing narrative really hinged on a strong reopening out of China. That's been a flop so far.
Right.
So you start looking at everything so far that we've gotten. This has been speculated for quite some time through the fact that OPEC cut supply and cut output like a month and a half, 2 months ago. And this is when there wasn't signs that the Chinese reopening was going to be a flop yet. There was thought that maybe it would be less robust than it has turned to be. But I looked at that at the time saying, what is the implicit admission here? If you're so optimistic about the global economy, you're so optimistic about China's reopening, why are you cutting supply? You want to sell as much oil as you can at the highest prices that you can. And so all of this information, again, I said this to Oliver this morning, on its own isn't necessarily all that worrisome. But it's all happening together. We had regional banks fail, but we also had international big banks fail. And you start looking at all of that. Yeah, maybe that hasn't been in the news in the last couple months, but if you recall back to 2008, 2009, there was calls that Bear Stearns and Countrywide were isolated incidents. Well, that didn't end up being the case. And so I'm not, again, I hate calling back to that time because it's not to say it's the same or even really all that comparable. But we can learn from past mistakes. And that's not to say, Chicken Little, the sky's falling, ring all alarms. But just because it's been like a month and a half doesn't mean all of those stresses are now gone from the system. All of those concerns are now gone. Well, what was the alleged reason for some of those failures? Higher rates.
Yeah.
So if we're going to keep getting higher rates, that's not going to put less stress on the system. It's going to put more stress on the system.
Yeah, and Nathan, to that point, the Fed's basically told you, even if they do pause next week, they're not coming down anytime soon because inflationary pressures are there. And that works itself in where those inflationary pressures are sticky. And that doesn't mean it's going to get easier out there as far as economic conditions go, right?
Yeah, absolutely. And that's one of the risks. I mean, what if inflation remain stickier than anticipated and remains above the Fed's target of 2.5%? How is the Fed going to react? I mean, the bond market and the probabilities are basically saying, well, they're not going to do anything if their next move is going to be a cut likely. So that's one of the risks you have to be worried about, that, hey, the Fed's going to come here. If it does be more aggressive, what kind of impact does that have? And have we even seen, to Alex's point there, the lag effect of the rate hikes that they've already done? I think we're still seeing the effect of that in terms of the changes in the consumer behavior, with them taking on more credit card debt, in the goods side of the equation, not the services side of the equation, though. On the goods side, we are seeing a lot of that demand destruction there. Just look at what a lot of the retailers had said. Will they start to begin to cut back on those experiences on the services side? That remains to be seen, but it's a little bit like a fuse that's lit, in the sense that the excess savings are heading down. You're seeing some signs that the consumer is beginning to cut. And then if inflation remains in there and the Fed has to be relatively aggressive, yeah, that's the risk that you have to be concerned about.
Yeah, definitely some risks next week with that announcement. All right, guys, let's take a quick break here. When we come back, we're going to talk Airbnb. The stock's down today, but still up pretty significantly, over 30% so far this year, but did get initiated with an underweight.
Too high there on SPY.
Here on Fast Market.
Did it. Just a little search for liquidity down there, I guess. Still in a bullish channel here. 428.45. 428.74. Carvana's ripping. 22.77 was the high on there. Nice. Yeah, 22.91 was kind of those first levels. But chart, I mean, these look good. Afternoon, Jay from the Bay. 69% short. Is it really? What stocks do I hold the most? What do you mean? Like, what's my largest holding right now? Got the new firm supporting your creditors. Hourly rate is $5 grand. It is expensive. Oh, the downward line. What are we looking for? You want some bullish hype? I don't have much for you, man. 23.40. I did not want that to break. Yeah. And consolidating down here, looking like a bear flag. So 1790. And the next level down. It makes it down there. We're back into kind of just holding and waiting on the filings. Maybe. I mean, not quite so soon, but that 23.40 was my level. Not quite so soon. We'll see. SPY ripping there. Rip.
Been robust, but their gross margin's starting to pull back here a little bit. Give me your thoughts here on Airbnb.
Yeah, and you're right. That asset-light model, that's great.
Got a truck from them?
Was a great boom
How recently?
As well, kind of more of this nomadic consumer that is out there and willing to travel and work from home and work remotely. But you're right. I mean, there's the on the negative side, there's the competition that's increasing there. If we go into a recession and we begin to see pullback on the experiential services side of the equation, that would be something that a company like Airbnb you'd have to worry about. And then there's the regulatory side. We saw that they, filed a lawsuit against New York. So when you have the government stepping in and basically fundamentally shifting those supply-demand metrics there, then that has a tendency to change the economics from the homeowners from that perspective, but then also affecting the supply, which could hit into growth. So yeah, there's looking at the forward PE, I think it's around 25, 26, which isn't cheap. Technically, it's still been in a downtrend since November of 21. So right now, the 200 SMA is just basically flattening out. So I think the market's attempting to figure out, to your point, how do you value this? And then also, where do we stand in terms of the future outlook of the consumer?
Definitely. What type of trends are going to change as those inflationary pressures continue to take hold? You mentioned consumer credit. That came out yesterday afternoon. Continues to be robust as people take on more
2 years ago.
Alex, when you look at this as an example,
Nice.
trade
Did you get your title in a timely manner?
Analyst came out, put a $99 price target on it. It's below where it's currently trading. They're losing their travel gross bookings, aren't affecting their peers booking and Expedia as much. How do you want to look at this from an example trade?
Yeah, I took a
high up
lot of
0.5%.
things into account at once when structuring this. One, volatility is at the 0 IV percentile, so you have relatively low implied volatility. It's still a volatile stock. It's still got more volatility than the overall market, but for Airbnb's kind of standards, or by
Q's up 1 1/4.
relative implied volatility, it's on the low end of the range. So I wanted to look at a strategy that would benefit from an increase of that implied volatility, but then also just the general sentiment seemed to be negative around the stock in terms of the analyst coverage that you just talked about. So combining those two factors, one, typically when you think of positive Vega type of a trade strategy,
Bearish on Airbnb.
Buying option premium, or you're thinking something in the horizontal time spread category. And so I kind of combined the two here. Looked at buying
Nothing wrong with the chart.
The August-July, though. So this is much more traditional in its timing structure. Obviously, back in the floor trading days of you or Kevin, there wasn't weekly options. So you really only could do time spreads this way. And I think you get that true Vega, positive Vega component of these when you have those more disparate times between the two options. And so I looked at this, buying the 110 put in August, selling rather the 1.
Nirvana breaking that next resistance level. 23 bucks.
Or $500 max loss on that $5.
All right.
But really what you can see, and I think the picture of the risk profile almost does a better job than I could illustrate in words. You think of the traditional calendar spread, it's almost like a mountaintop that peaks out at your strikes. Well, what this does is almost tilts it on its axis. And just
each time I go a shorter time frame, I see it's actually higher. Gap fills at 2670, 750.
So one of the big fears, I think, with calendar spreads is you can be too right? You can be like, I'm bullish this stock or bearish this stock, and it can overshoot. Well, the diagonal spread eliminates kind of that overshooting component of the risk, and so it will just level off or potentially even increase profitability if you overshoot in this case. So in a way, sort of a strategy that combines a lot of
Is it through your bank?
what's going on in the stock. And
So they set the title to your bank. Yeah, Carvana wasn't giving out titles for a while.
Yeah,
I guess your bank took care of it.
Diagonal on the put side, and you're only paying $5. That's why you don't get that dispersion there down at the end. But Nathan, when
Sell
you look
Carvana
at this,
short.
$500 in risk on this one, your break even just above 110.
Short it.
So you're paying about
Sell to
half
open.
the width of the strikes, but you're giving yourself 71 days till August expiration. And as you get closer to July expiration in the next 43 days, you'll have that ability to potentially roll or adjust that short strike on the 100 strike that you sold in July. Your thoughts here on the put diagonal to take that bearish stance as an example?
Sure, yeah. So it's an example trade. Couple things stick out to me here. I mean, think of the evolution. Alex could have gone out there and just bought the August 110 put.
I actually is ripping.
But he sold off
Look
some
at
of
this
his
thing
risk by
go.
basically selling the near term lower strike 100 strike put there.
The roller coaster still.
By about 20%. Furthermore, because he sold off that risk, let's say the stock were to
Gonna go test yesterday's highs.
by that July expiration,
Certainly looks like it.
In that assignment ability, he's still going to make a double between that 110 to 100 level in the event that it does completely.
Not your daddy.
Could close out both legs there and just take that.
No reason. Not that I've seen. Kind of strange. I was not expecting it.
Earnings event that's also included in that standard AUG expiration, which means, generally speaking, that implied volatility is going to be relatively sticky, and it also gives him the option of converting it into a more traditional bear put spread if he wants to.
Yeah, that's true. You do capture.
I'm literally regaining.
Might keep, or it historically has kept.
I just flipped the short to long there. That would have been nice.
Have some assignment risk.
The bottom today.
Expiration on your short 100 strike call that you sold in July, but a good look at a different type of strategy that gives you more duration. We haven't been talking about diagonals in a longer duration type of series that often, especially to the downside. So good look at that one. And thanks to Alex Coffey for joining us, senior equities contributor here on the network. But coming up after the break, Nate and I will be joined by Andy Swan from Likefolio for discussion on DocuSign, which is only up about 3% so far this year into earnings after the close. Fast Markets coming right back.
Just a SPY and NASDAQ, I guess, yeah. Dow Jones is ripping also. Pumping it today, though. A little bit of this, a little bit of that. I don't know what I think about it, but cash carry puts on GME might be a good day to do it. Really, this morning would have been good, but
to think that we could see a repeat of last quarter. The stock has almost regained or has regained, you know, all of that loss that it had last quarter after its earnings call. I think this is a pretty good setup for a bearish trade going into earnings tonight.
Hey, Andy, Nate here. You know, when I look at your chart there of the positive mentions and negative mentions, on the long-term chart, it looks like you have a positive correlation with the positive mentions and negative mentions, meaning they kind of track together.
Oh, that's mom.
And then it looks like towards the end of that chart, around early March, the negative mentions are going up.
Not marginable under $3.
Positive mentions are going down.
Doing well, Julian. Thank you.
Situation, but I'm wondering, does this have to do with the regional banks, or is there something else going on there that would contribute to that kind of reaction?
Yeah, you know what we find with this, and you're right, it's a good eye there, is
oh, nice tree. Glad to hear. Yeah, just they had all the bad news about people not getting titles and all that stuff. So
are happy and those who are unhappy, the unhappy starting to win a little more. You can see it at the end of that chart, and that's, you know, certainly not good for a company that relies on subscription revenue.
About this morning,
an indication that we're going
I think you could have some more downs, honestly.
A considerable
just have to see where it shakes out.
I think there's a lot of
I don't know where it's going from here.
And a lot of companies that signed up for DocuSign accounts during the pandemic that they simply really don't need anymore, or they don't.
12:30. Thank you guys for your likes. We're 35 likes on the day. Appreciate it. Has been pretty straightforward. A little dip in the morning, retesting the support, and just rallying ever since then.
More room for competitors to move in, and I think competition in this space is heating up in a really big way. You know, Microsoft has, Adobe has similar products that can get the job done really kind of within people's normal workflows. You don't necessarily need a DocuSign account to get e-signatures done. And so again, I think, you know, this company's business is a good one. There, you know, I think the product is very good, but it's just kind of feels a little outdated. It feels a little unnecessary.
What's going on? Do you guys know what's going on with the AMC and Ape and the lawsuit and all that?
Going to have to come out and try to put on their, you know, artificial intelligence cheerleading outfits to try to get something positive going for Wall Street.
Yeah, and Andy, when I look at this, you know, they've got really good gross margins, over 80%, operating margins topping 20%. We're seeing that total addressable market kind of expand. To kind of expand on what you were saying, is this just basically due to that a lot of economic activity that deals with this, whether it's lawyers, whether it's property, that is going to be the key for this company moving forward, that they need to see the economy start to get healthy instead of deteriorate, and that will be the boon for this type of company, because, you know, maybe a smaller company might not use Adobe or Microsoft, but they'll use DocuSign. I've used it a few times myself. It's a great product, but to that point, is it economic activity that's a driver for this type of stock?
Absolutely. I think that, you know, part of it's just you know, momentum of interest rates. I think that the longer interest rates stay the same, or even
I mean, you're gonna get Ivy Crush from earnings.
Transactions will reinvigorate.
So
I think that's a huge part of what has to happen for DocuSign. I think the other
calls will only be good if it rips.
This earnings call, you know, as I think that there's probably room for the company to get rid of some staff and to increase. You know, that
settlement notice was sent out. Maybe people received it late.
Which Wall Street could like.
You're talking about as Ape. What about? Isn't there something going on right now with AMC and Ape?
They're going to get into AI.
Aren't they waiting on?
So that could help.
There's like a lawsuit against.
You know, if they really focus on margins through.
Maybe that was what you're talking about. Maybe
that's the other side. But in terms of consumer demand,
no, that's okay, Tree. You don't need to send it to me.
Things are not going DocuSign's way right now.
And you mentioned earlier.
Oh, okay. Rolling on the 29th. Thanks, Jay from the Bay.
Yeah, we're at
Cover calls are doing great. Yeah, a lot of crush there.
You know, and I think worthy of a trade.
Yeah, definitely. They give cautious guidance all the time. They just changed
the
their CEO also, so we'll have to wait and see on that. But great data as always, Andy. Appreciate it.
Nirvana coming down a little bit.
All right.
2291 was kind of that level. Hit 2350.
Here on DocuSign. Nathan, now I want to get your take here on this company. It seems like, it just seems like easy, like this company should do really well. They've got high.
Just kind of wondering also why the IV on AMC is still so high. I'm assuming it's because of that
that might cause some problems. Option markets pricing
that ruling on the 29th.
An $8 move either way in the stock. How do you want to look at this from an example trade?
Sure. Yeah, and you're right. I mean, I think the total addressable last I read was, 50 billion, and they said they want to be a 5 billion revenue company, and you would think that, there's a lot of potential there. On the AI side, I think they're utilizing, allowing the companies to incorporate their AI to look for those risk levels within a lot of those agreements that they're establishing. I'm not sure how much legs you have with AI within that, but I think we're all learning that every day more and more. But when I look at the stock like this, it's not that expensive at a forward PE of 21. It has rallied about 20% plus over the past 5 weeks here or so. But what sticks out to me is that this stock gaps post earnings. Going back to November of 2021, I mean, this thing has really seen some outsized movements after the earnings announcements, either higher or lower. And so I was looking at the implied volatility and also noting that the implied volatility is, at the lowest levels over the past 5 quarters or so. And so if you're coming into an earnings report like this and you don't necessarily have a view bullish or bearish, we saw Andy's view of bearish, then you could put on something like a long iron condor, which is basically saying, I expect this stock to repeat history and move. And the strikes that I selected for tomorrow's expiration was around that implied move. I was going with the 53.50 on the put side, and then going with the 61.64 on the call side. At the midpoint, it was roughly about $1.80 debit for this $3 width on the wings of this iron condor. So looking for a move one way or the other post earnings. Please repeat what you've done over the past, several earnings announcements is what you would be saying with a position like this heading into the report.
Yeah, a good way to look at this, because we typically talk about selling iron condors and take advantage of time decay or theta that works for you and higher implied volatility going into earnings. This one takes advantage of a move outside of that 1 standard deviation range and actually less on the upside. So let's break it down. You're buying 2 verticals here. You're buying the 61.64 call vertical, and then buying the 53 put, selling the 50 put. So you're buying that $3 wide put vertical. Combination, you're paying roughly about $1.78 debit for it. That's going to be your risk. Your potential reward's only $1.22 per spread, and that's outside of 50 on the downside and outside of 64 on the upside. But you can take a look at this. It's in the June 9th weekly cycle that expires at tomorrow's close. So it's really short-term earnings type of example that we're giving you here on this trade. With those break-evens, you see they're just below, above 51.20 and just below $63. So if this thing moves that 1 standard deviation or more, you can look at like folios data to the downside. It would work out below that break-even. Or if it moves higher, remember there's short interest built up in some of these names that have underperformed the overall market, where you could see a 2 or 3 standard deviation move to the upside. And that's what you kind of want on this type of strategy, where you're paying to buy the iron condor, where you want some movement on this one. So a good look at a strategy that we talk about quite a bit, but doing the flip version of it, where you're actually buying it, expecting an outsized move post earnings. All right, Nate, we're going to take a quick break here, but when we come back, we're going to take a look at another stock in the news today, and that's T-Mobile. It's up today after an upgrade, but it's still down about 7% so far in 2023. We're going to take a look at that name right when we come back here on Fast Market.
Yeah, it's a little different with this one, AC. Not just like random dates. It's they're held legally to those dates. U.S. cities where the tax rate jumps most between 100,000 and 250,000. Where it jumps the most? Portland, St. Paul, Minneapolis, San Fran, and LA. Do Kwon may spend most of his life behind bars, first in South Korea, then in the US. AI startup Cohere raises $270 million on NVIDIA backed funding round. The relationship between the United States and China is at its lowest point in decades. U.S. solar market is on track to more than double over the next 5 years as the landmark Inflation Reduction Act boosts domestic manufacturing. Gary Gensler blasts crypto firms for unregistered staking. New York City schools say remote instruction day for students June 9th. Nice, coming down a little bit. You think guys is involved? Well, that's smart. College is wasting money. But I don't know if BBYQ is the better investment. No, it's still better. It's still better. 21.49. You're stoked on that, huh, Lords? Good. Good to hear. As long as you're happy, buddy.
And EBITDA growth, but overall, I think that the industry is pretty much a lock when it comes down to pricing. They're really pricing off each other. They're not really going to budge on prices much unless there is major competition. Amazon is certainly a threat, but it's going to cost them quite a bit of money to do so.
Yeah, I liked how they pushed back immediately on that news that they're going to offer something $10 a month. I saw something along those lines. So yeah, that would be definitely a disruptor in that space. All right, George, appreciate it. That's George Tillis, Senior Markets Correspondent here on the network, breaking down T-Mobile news. So Nate, I looked at a strategy here as far as an example that just takes advantage of this move that, this analyst basically put out there. And if you look just a few weeks ago, the stock was trading over $140. So I just looked at something that's going to take advantage of maybe that lower implied volatility environment that we have right now as the stocks kind of consolidated and moved off of those lows post that announcement, possibly for Dish and Amazon. Just looked at buying a call vertical here, Nate, and I wanted to get your take. Going out to the July monthly cycle, so about a month and a half till expiration, 43 days. Buying that at the money 130 strike call, and then against it, because I want to stay risk defined and I want to offset some of my costs, selling the 140 strike call against it. You can see there from the risk profile, if we pay a debit of around 330, it's probably trading closer to 3.5 now. That's going to be your risk, $330 per spread. But it can expand to $10 if it goes back up toward that 140 level here, Nathan. Give me your take here on just buying a straight directional call vertical without,
Is leading the transition.
buying the call that's going to cost you a little bit more money.
It's not a bad idea maybe to load up on GME calls. I mean, all this volume and Ryan Cohen's tweet, like they might have something planned for the shareholder meeting, like you guys are saying.
Go back to that June 2nd candle there.
You got the IV crush out of the way. So price is kind of cheap. I don't know, $20. It's not like that cheap. Kind of the average, a little above average for the last 6 months. A little above average maybe. So, and after such a big event like that, just immediately be calling for a rip. Feel too early on it, but sometimes you get lucky with those. Sometimes it just kind of goes back up right away. For the IV, yeah, IV, like it's let's see, on the monthlies, we're at 80% now, so still pretty good.
We're doing a mean reversion bounce potentially. Number two, maybe Amazon news, it was a non-event, and or we won't hear anything about that.
You had enough time, you're close enough to money, it's probably a good trade.
And then number three, obviously, Tom, you're setting this type of example trade up that accompanies that bullish note from Wolf Research.
Yeah, and you only need about 2% move to get back above that 133 with a month and a half in duration on that example trade. So a good look at a directional bias trade, offsetting some of the costs by buying the vertical as opposed to just the call outright. All right, that's going to do it for Nate and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up.
As we know, investors do have a relatively short memory. At least it feels like that is the case for a lot of these stocks that are outperforming on the session today. We'll kick things off here with our upvote and downvote segment. Following that, we'll chart and trade those upvotes. Our FOMO name is all things Amazon, with some bullish analyst notes today, as well as some developments into their Prime Video offerings. Then we'll look at GameStop, which is selling off after its first quarter earnings, and the CEO leaving the company. Last but not least, our under 30 name today is Carvana, with a monster move to the upside.
Yeah, tons to get through. One of our old favorites, Carvana, making a triumphant return. Looking forward to that conversation, of course. We'll talk some GameStop as well, so tons to get through. I'm looking forward to the Amazon conversation as well for FOMO. Amazon just making so many moves lately. Looking forward to chatting about that one. But let's do upvote, downvote, not endorsements, not recommendations. Couple earnings names here on the list, couple analyst moves as well. Let's kick it off with one of those earnings previews in DocuSign. I cannot think of, and I know Netflix was very volatile around earnings. I know Meta was very volatile around earnings. We've had up moves, we've had down moves, but DocuSign seems to deliver volatility around earnings every single time that it reports.
It does, because DocuSign has been absolutely all over the place, although lately has been somewhat stuck range bound ahead of their earnings event. So we are expecting their revenue actually to increase 9% year over year, compared with the 26% growth we did see a year ago on some of these weakening economic conditions. Adjusted earnings are forecasted to rise about 44% to then 53 cents per share on an adjusted basis, which would also then mark an improvement year over year, but a deceleration sequentially. Adjusted operating margin could expand around 420 bips from around 17.5% last year, while billings growth is expected to come in around 1.3% versus the 13% growth a year ago. So this name, like you said, Alex, I think prepare for volatility because it seems like they tend to disclose some other offerings typically on their earnings events, and we see these shares move.
Yeah, I think there's going to be some looks into the net retention rate as well. Consensus suggesting that might fall just ever so slightly from where it was. So lots here. I think this isn't necessarily a barometer entirely for kind of cloud software demand, but when you look at kind of where DocuSign was, all the hype around it, and also acknowledging the fact that, hey, this is really, really useful technology. It's really brings some ease. I'm in sort of lease renewal season, Jenny, as I imagine you may have had recently or have again at some point. And these are the kind of technologies that just make those processes way easier. But there's more players in this space now. It's not just DocuSign. And of course, it's really not that hard to replicate. And also, it had a huge pull forward in demand during the pandemic. So obviously been a rocky road. Having a nice little
And he'll fix the markets.
today, up 1.5%. I am going to say upvote for this one. Hard to shy away from just how volatile this thing is around earnings. Maybe the technical picture can provide some clarity. But
Head and shoulders are on the 5-minute on Carvana.
Name that has had
The resistance.
Bit of a fall from grace
Careful
here.
with that one.
To put it lightly, at one point, nearly a $70 stock is now $7. So losing nearly 90% of its value here from its peak to its current levels.
Right. I mean, talk about another volatile name. This name, though, has been on a pretty steady decline and has been stuck now around that $7.5 level, like you can see on the daily chart. Now, we are expecting their first quarter results tomorrow morning before the open. Shares are down about 1% today on the session. Now, based on analyst estimates, NEO is projected to announce earnings per share at a loss of 44 cents alongside revenue at around 2.3 billion. Now, we are seeing also multiple Chinese stocks falling yesterday on the session, which is adding to some of the weakness we've seen in NEO shares following some lackluster export data out of China. But as we know, they've already disclosed their first quarter delivery numbers, which did put them behind Li Auto, as well as they have really seen some increased competition in the Chinese market from Tesla as well as BYD. So that space is only heating up, and it seems like we are seeing right now the very clear winners and losers as Tesla right now is surging towards its 10th straight gain. So NEO, completely different chart. Hard to even compare to some of the other EVs at this point, Alex.
Yeah, this is one that I find kind of a great interest in. I think it's a kind of a fascinating company. I think the vehicles look pretty unique and are certainly have had its ups and downs as a company. All that being said, though, Jenny, it's a $7 stock now. Even with its market maker move of over a 10% move being priced in, when the stock prices get kind of condensed down below $10, options trading becomes a lot more binary. It becomes a lot more directional, a lot more speculative, and it kind of takes the strategy element out of it. And so because of that reason, there's just not a whole lot to explore. I mean, if you're a fan of NEO, you could look at something that's a little bit more optimistic and bullish in this. If you're kind of wanting to bet against it, certainly
GME climbing up a little bit.
Go to zero, it's at $7, so keep that in mind as well. But
if it retests the high of the day,
because it kind of takes some strategies again off the table, I'm going to say downvote just because not a ton to explore. The next one on our list, though, is Adobe. I know that you were talking a little bit about this with us on Fast Market as well. This is a company that has earnings, I believe, next week as well. This is like the cloud player in design. I mean, it is best in class, and I don't really even know who's close to second.
Yeah, I don't really know either who competes with like Photoshop or InDesign, which are some of its creative suite products. But we are seeing shares up about 5% on the session following its EMEA 2023 summit regarding a lot of its updates into generative AI services. Adobe did announce enhanced AI features for its content supply chain solution, which now does include its Firefly for Enterprise, which aims to improve some of this overall content creation for generative AI solutions. I can't wait to see how this plays out. This is sort of what we said on Fast Market, where we've heard a lot of this language model AI talk. I want to see how Adobe will then shape their products based on the AI advancements, frankly. Now, we also did see Piper Sandler maintain an overweight rating on shares while raising its price target to $450 or $500 from $415. Deutsche Bank also maintaining a buy rating, raising its price target to $500 from $430. This name has price targets ranging from $320 all the way to $500. So quite a range when looking at Adobe's stock, but $500 obviously implying a good deal of upside from where we're currently trading, even with this nice move higher today, Alex.
Yeah, earnings event next week, potentially being the catalyst. Obviously just had this event, and obviously some excitement here today in the name, up almost 5%. But Jenny, we're getting to the point now where it's like it's almost a requirement if you're one of these tech firms to say you're doing something.
Wheat has a nice looking chart.
Yet they're still being rewarded when they do. But I think that there's something to think about when you consider the fact that we're talking about a $200 billion company, has hyper successful businesses that it's operating in its core businesses. Is this one, if you're an investor, and it's not limited to Adobe, you have other names like Amazon, Alphabet, Microsoft, Apple, for example, that you can comfortably potentially invest in sort of those core businesses, and then they have these sort of other bets categories, as Alphabet likes to call it, where they're doing this long-term sort of investment in R&D into other things, and you can actually potentially benefit from that as well if they do kind of strike gold. So this is sort of one of those situations where it seems like the big are getting bigger and just furthering kind of their competitive advantages. But we'll see on this how successful they are at actually accomplishing what they're setting out to do. But I do think it's very interesting to kind of watch that unfold, as these are the companies that have the money for the R&D right now. It's not their only business. They can do multiple things at the same time, where if you're a smaller company just solely on AI, you really got to get it right.
Right, and I think that it helps, obviously, to have a strong balance sheet positioned into this AI push, because right now a lot of these companies that are surging solely based AI then give me some pause. But Adobe is obviously a credible software company without even the AI aspect of things. But our last name is another name that has seen some strength this year, to put it lightly. That is, of course, Meta Platforms, which I feel like we discuss almost every single day. Shares are up 1.5% now on the session. We are seeing some analyst calls today. Wells Fargo actually with an equal weight rating and a $276 price target on the shares, which would imply some upside from where we're currently trading at about $9 above where we're currently looking at. But they do see some near-term upside and optimism, as well as some healthy ad acceleration for Meta. And despite this recent momentum, they find bullish buy-side activity, even with, right now, the fact that we've seen shares run up over 100% from their 52-week lows here. Meta has been one of the strongest performer, definitely the strongest performer from the FANG acronym, which I know we don't really use anymore, Alex, but just goes to show that it's outperforming its mega cap peers. Now, of the 48 analysts that do cover this stock, we're definitely seeing a skew to the bullish side. We're seeing, significantly analysts, 17 are bullish, 29 somewhat bullish, 2 are indifferent. There are no sells in this name, and the average price target right now at around $274 is about $2 below this analyst's price target, but also still implies upside from current levels.
Going to go ahead and say downvote for Adobe because of that earnings event being very close. I'm sure it's one we'll come back to. Say upvote for Meta. It's been really, really impressive to watch this one make its comeback. Obviously, it seems to only be picking up momentum. Analysts, though, sort of on a pause. I saw the equal weight from Wells Fargo. Price target set, 276. We're basically there right now. And so you start looking at sort of how far this rally's come. Obviously, it's nowhere near its all-time highs still, but man, it's really made this a lot more of a complex conversation, I would say, just because we're not talking about a stock that's $88 anymore. That was once $400. We're talking about one that's gone from 88 now to nearly 300 in short order. So how quickly the tides turn and how quickly that narrative can shift after a little bit of a positive stock price reaction, little bit being kind of understating the massive rally that we've seen in Meta.
Yeah, and we'll have to see if DocuSign can catch any sort of the broader tech strength when it reports its earnings. Of course, we'll be looking at DocuSign as well as Meta Platforms. We'll be diving into the technicals as well as some example trades. Stick around to Next Gen Investing. We'll be right back.
White House National Security Council spokesperson Kirby tells Reuters It's not accurate when asked about Wall Street Journal report on China to establish spy facility in Cuba. Barba coding down here. Great.
Darlings in the tech space and is sensing some fallout, although has caught somewhat of a bid in the broader tech strength we've seen on the year and is expecting to post top and bottom line growth now in its upcoming quarter. So we'll have to see if they can meet these high metrics. But here to tell us more on the technicals, I'd like to welcome in Rick Ducat, our chart master. So Rick, walk us through what you're seeing in DocuSign. We talked about this name so much back in like 2020 and it has since fallen out of favor somewhat.
It was a different world back then, what could I say? But it hasn't been the same for this chart either for quite some time here. Going all the way back here, you can barely see it. Look at this move we saw from earnings about a year ago. We fell about 24% in one day there. And since then, that's been the start of a more triangular type pattern here, going off those post-earnings highs right there, with a downward sloping trend line going across the highs and starting down here from those lows near about the $39.40 mark or so. So compressing price, increasingly bouncing around between these two lines that are converging toward each other. And even more recently, since the last earnings event here, we can see that we've established an even smaller range between about 48 to 59, 48 being our green dashed line, 59 being our red dashed line here. We did look like we were perhaps going to break above it yesterday, but we saw a pretty sharp rejection. Things took a tumble when after peaking above that $59 mark here. We also did not make it to the top of our triangular pattern here, so that's maybe not the greatest sign for the bulls here, but remember that earnings could change a lot of stuff with this price action here. And we also could say that the trend overall in the shorter term to medium term at least is still trending upward here.
Bullish on the 69-day chart.
Our two moving averages, they're both trending upward. The faster one is outpacing the slower one here, and we're also above, hanging on above our volume profile point of control, this thick red line here near 57. That's the area of heaviest trading. So we can see that there's been quite a bit of trading in between this range. This is by far the heaviest area that we have recorded on our chart here during the past year. So look for a move beyond that for price to be drawn either to this node near 65 or this node near about maybe 49 or so. RSI, our measure of momentum, not a great sign here that we crossed above into the overbought area, and then we saw a rejection below that area at the same time that price was rejected as well when trying to climb above that $59 mark here. So that's not really what you'd want to see, but once again, you know, earnings could really be a different ball game once they come out here. So I wouldn't stress about that too much if that was something that you were going to be worried about here. So looking at some support and resistance here. To the downside, if we break through our volume profile point of control, look here at the intersection of our two shorter term moving averages. Those both come in around the $55 mark. So we've got a confluence there. We've got two different indicators converging at the same point. So two different sets of eyes would be making trading decisions based on those potentially. So that could be a point to look for some support. To the upside, if we do break through $59, look for the top of our triangular pattern here, currently around the $61 mark to provide some potential resistance.
All right, so 61 to the upside, Rick, but like Alex and I have both discussed, this name tends to move on earnings, so things not exactly painting the most promising technical picture for DocuSign ahead of this event. So now, Alex, when trading this name, I think given the fact they're facing a relative
GME
into this print, walk us through a more bearish leaning trade.
Biomedia Fusion.
This is one of the more speculative trades that we
Biopharmaceutical.
From a trade illustration standpoint, Jenny.
Gone from 280 to 43.
A put calendar that's almost 2 times the market maker move to the downside. And the reason being is this stock's proven it at times that it's got the ability to move multiples of that expected move or market maker move, which of course is just looking at real-time option prices and spitting out a 1 standard deviation range. But this has been a name that has been in the 2-3 standard deviations more times than others. And so I looked at buying a 45 put calendar week over week. So the nice part about this is because it's quite speculative and looks for a pretty massive move here, it's only a 20-cent debit. So a trader who did a 1 lot in something like this is only risking $20 US. So this is not only one of the more speculative trades that we've oftentimes potentially looked at, but it's also probably one of the smallest in terms of notional value trades that we've ever looked at. And that, again, is kind of coincides with one of those things that we talk about on a regular basis, which is how risk and reward kind of coincide with probabilities of success. And so if this is a relatively lower probability of success, it would only make sense that it would have a relatively lower notional value at risk. And so looking for a move towards 45, obviously being the best case scenario in short order around this earnings event, selling tomorrow, buying next week's 45 put. But it's highly customizable. So someone who has a slightly different outlook, be it bearish, bullish, neutral, or a different target, precision is the most important piece. So I just happen to show the quite aggressive, almost ultra bearish version of this, Jenny. But there can be any strike selected. If you thought moving towards the market maker move, maybe targeting around 50 was better, maybe a 50 put calendar would be a better target for that particular trader. But just one way to look at it, $20 US in risk, one of the smaller, but again, maybe lower probability trades that we've looked at over the years.
Yeah, now to shift gears here and look at Meta Platforms, which is honestly incomparable on a chart perspective because shares are up over 120% now on the year and up over 200% from their 52-week low. So Rick, walk us through what you're thinking. We did see from Wells Fargo that $276 price target level. So show us the technicals here.
Absolute ripper of a rally in this one. It's there's almost not really that much to say because the move upward has been so dominant and so strong here. We can see that this white dash trend line going across the lows just really not showing hardly any signs of giving back at all. The times that we did pull back a little bit, we stopped short at our yellow 21-day EMA and found some support before resurging and
this seems like it's a pretty good value right now.
Really. So today we can find that we are down a little bit off those new yearly highs that we minted.
Like really
trading days
quite
ago.
good.
And one thing that I thought was remarkable about this chart, aside from
Highs coming down there.
Itself,
You guys seeing this? Dish? I think it's just had a lot of sell-off from
often, making its way back up into that threshold above 70, not really staying in it for very long, but the frequency of the times it crossed above was very notable, I thought here. Now today we're crossing below that threshold once again here. That's typically regarded as a more bearish sign here.
Yeah, they do. They do $4 billion a quarter in revenue.
I would say short this one at your peril.
They're making $323 million.
It could be going against a very strong trend that's showing few signs, if any, of slowing down so far. Moving averages are all trending upward. Prices above all three of them. They're all diverging farther apart from each other.
Market cap's $4 billion.
The pace of these price increases is still rising. So we can look at that and we can think, okay, we have been supportive around our 21-day EMA in the past. That could be a point to watch for some support. It's just below where we are now, near about the 255 level. It's basically right on top of that white trend line as well. So that's two different sources of potential support. I also put up our standard deviation channel study. We derive this by making a linear regression line, our blue line here, our line of best fit based on closing prices, and then we just extrapolate channels +1, +2.
Yeah, I mean, it might be kind of a... What all do they even own? They own Sling, so they have some exposure in the streaming.
And that comes in just below our moving averages, near about 240 or 250, 253 or so. So keep that in mind as well.
Wireless 5G deployment?
Even further beyond that, if you know, something happens that disappoints investors or whatever, look for these old highs near 243. That could be another potential stopping point here. Now, it's always difficult to say where
it's at like multi-year lows.
Upward to stop. There's not really any recent
lower than it was in 2008.
We don't really have,
given it's sharing a lot of its market with got a lot more competition now, and it's potentially not keeping up, but it's still doing a ton of revenue and making money on it.
Right around 294 or so. That's where our +2 line would come in. So look for potential resistance around that area.
Yeah, and we're starting to see things falter just ever so slightly off intra-session highs, down about $1 now.
Hey Sterling,
stands, but I like what you
how's your Tesla doing?
It's been pretty
3%, nice.
Meta platforms this year, following this year of efficiency. We've really been in a solid uptrend ever since. We will leave it there. Appreciate all the technicals as always, Rick Ducat, our chart master. So Alex, when trading this name, I think you have to consider the fact that this is a stock we're looking at that is not necessarily a $2 or $3 stock that is up 120% on the year. I mean, what a rally it has seen. So then leaning into a more neutral position, perhaps betting on the fact that maybe you think it has run up as far as quickly as it has, and you want things to sort of settle down.
Yeah, and I really leaned into the Wells Fargo note and the initiation there, where they went ahead and basically just said equal weight and price target of 276. And given that 276 price target was probably going out 12 months, I found a price target a little bit shorter term, just going out to July around the 270 mark for our short strikes. And what I looked at here was essentially starting with the neutral idea of a stock kind of staying in this area, maybe inching higher, and selling the 270 straddle, but then also knowing that likely wanting to have a risk-defined trade for a trade illustration, and went ahead and bought some wings, creating an iron butterfly, which effectively is consisting of selling a put vertical, selling a call vertical, and they're just smashed together at the exact same short strike. And so if you were looking at the risk profile, would be almost triangular, and then it would flatten out with defined risk. And so with this particular one, what we're looking at is selling the 270 straddle and then buying the $15 wide wings. If we're able to do this for an $11.50 credit, for example, it would limit the risk to $350. That would take place if the stock at expiration was outside of those long strikes, and the in-the-money options went through assignment and exercise, offsetting for the full $15. But if it were to fall in between, there's where things get more interesting. You'll notice that there's two break-even points. One is at 258.50 and the other at 281.50. You find this by adding the 11.5 credit to the 270 call and subtracting it from 270 on the put side, and that gets you to those two break-even points. It has varying degrees of profitability the closer it is to 270, in which it peaks out at that full credit theoretically. The likelihood of actually capturing that full $11.50 is not extremely high, but typically a trader who would utilize this type of a strategy would sell it for one credit, and at some point in the future, if possible, and the secondary market allowed them to, they would look to offset the trade, buying to close for a price less than 11.5. And so different traders may have different price targets, trying to capture some percentage of that credit overall over a specified time frame, but that's unique to the individual who would be in a trade like this. But typically not a strategy that is held all the way to expiration, because it's likely to have at least one option in the money at almost every scenario.
It feels like Meta almost has an earnings spin at this point, or there's some kind of catalyst to watch every single month just based on the way that this name has moved year to date. We will leave it there. Also important to keep in mind for both of our example trades today, they do contain multiple legs. That can lead to higher transaction fees. Short options can be
we don't know. I think they have to have it filed by tomorrow. So whenever they have it filed is when we should see price action from it.
Even more than Meta platforms, and that is Amazon. We'll discuss the e-commerce giant coming up next.
I mean, we could hear about it today, I imagine, but it'll probably be after hours. So wouldn't see the stock move then. If you're looking for a show, AC John, you should just watch crypto. Morning, Tasty. I don't know. Yeah, he might be buying the dip. Ton of volume today. Not a whole lot of price action, but volume is substantial. We're at almost 16 million on 130. Just showed to 18 million, which is a ton. But we're just like halfway through the day. So, yeah, he might be buying in, and maybe that's why he said not for long. Maybe it was partially him talking about the stock price. I think it was also had to do with Matt Furlong working on something else with him or for him. It's coming down a little bit here. Eagle has landed. Even though you don't say it, just from you typing it. Pretty good. Eagle video, a short video algo. I mean, you don't type it that much. Membership is way down. Oh, not get ahead of ourselves here. Man, this guy loves Eagles. This guy loves America, is what I'd say. IEP. Yeah, looking like it's making a little head and shoulders there on the hourly. But could just be consolidation still. Gotta wait for that neckline to break, which is like 2640. Pretty short term. Could be due for a little retracement. Back west, back testing the highs, 1.7% up. Jenny put her glasses on. Afternoon glasses.
Yesterday and some of its password sharing.
Can I
won't go on my soapbox about how I think that's a good thing.
getting a little
I do think this
browsing in the afternoon? Gotta put on your glasses.
You know, typically just the way they could only add to monetization of their users. But we are seeing some analyst coverage today from Wells Fargo. They
GME down 16.8, 21.71.
$59 price target. And the firm also designated this stock as a top pick in the overall internet sector. The street is really, they said, overlooking some comments that were made by Andy Jassy at Amazon's annual general meeting on May 24th that indicated some of these regional fulfillment center models are already having a meaningful impact on their fulfillment and shipping efficiency. Additionally, they also noted that the Amazon North American margins are set to return to 2018 levels in 2025, which is 1 year ahead of the street on some
Those practicable glasses.
which is something I would actually like to see.
I don't know if that applies there, Batman.
Consumers, but all in all, obviously that would be a huge benefit for a name like Amazon, which saw nothing but stellar growth for the last 2 decades, and in a sense slowed some.
There you go, Hugh. Hugh's got some Jennies in the chat.
It's hard to even say that because
This is the way.
50% on the year. Of a lot of these mega cap names we so frequently discuss, they are the second best performer just behind Meta Platforms.
You know, Jenny, I don't often agree with the analysts, but I think I have to agree with this analyst that some of these comments may have been overlooked because they called them out, and I look down and the stock's up 2%. So I know there's some broad tech strength today, but this is clearly an outperformer, and largely, maybe it's somewhat on the news of this ad tier potential rollout, but seemingly this is the primary story in Amazon today, is this note from Wells Fargo. I know Wells Fargo had a kind of a slew of analyst calls today across a wide range of stocks, but this being one of their most optimistic calls, one of the most optimistic price reactions, I don't want to say for sure, you don't want to correlate too much, but it seems like this is having an impact on the stock.
I mean, absolutely, and I just think that for a name as massive as Amazon,
No, it's not quite the same there, Kitty Daddy.
Note some credibility here, and I think all in all, any sort of
But there are no after hours in pre-market.
The word efficient, it seems like right now the street tends to like that, especially for companies.
Oh, on OTC it's like a lot shorter.
Into shipping again, Alex. I think
after hours in pre-market it really doesn't move.
Amazon employees at
Usually,
at least twice a day.
even less liquid than trading hours. I think it's only like an hour or two before open, and then maybe an hour after close. And it's hard to see. Yeah, some of PD shows it. E-Trade sometimes.
I feel for the front desk people at my building. I see all the packages, not just from Amazon, but a lot of
Happy if IEP comes down, I'll get another cash grid put on it.
So all the best to them, and I apologize for anything I may have ordered that might be on the way already. But let's talk some trades here in Amazon. This is a strategy we've been using a little bit more frequently, kind of across the program, because we're in a low volatility environment now, and oftentimes the strategies kind of shift as volatility conditions change. And so looking at buying a call diagonal in Amazon, in this one, 4% current IV percentile is certainly on the lower end of the range for Amazon. But a call diagonal, because looking at something more bullish on the heels of this Wells Fargo note and obviously the subsequent price action as well. Buying an August 130 call. So again, here's those August options coming into play again, Jenny, reminding us just how late in the year we already might be. But selling July, the 135 call against it, trying to bring down that overall debit just a little bit here to $4. And that $4 debit represents our risk, which is 400. It's a bullish strategy because as you'll look at the risk profile, it performs quite well if the stock goes higher without taking any additional risk to the upside. So certainly one that has a best case scenario. That best case scenario is sort of a grind towards 135, potentially an expansion of implied volatility as well along the way. It can overshoot, but because of how it's structured, there is no theoretical upside risk on this one. It would just simply be giving back some of those potential gains that would be a little bit bigger potentially if it was somewhere between 130 and 135. But as you see, certainly a bullish strategy. Almost looks like, and I think this is the best way to think about it, the risk profile of the calendar spread, if you just tilted it on its axis and sort of took away that overshoot risk that we see in some of those strategies, Jenny.
Yeah, analyst community overwhelmingly agrees with you on the bullish stance, as there are no sells currently in Amazon. So some pretty strong conviction there. And I cannot even comment on the fact that we are already looking at August expiration, because that means we are already like halfway through summer, which is horrible. But we will leave it there for our FOMO segment. Now coming up next, it's time to look at GameStop, which is down almost 17%. In reaction to its first quarter update, as well as the CEO departing the company. We'll discuss those results with Renita Young coming up next.
Cliffhanger. Keep us on the hook. White House says report that United States nearing deal on Iranian uranium. That's crazy to say. Iranian uranium enrichment sanctions relief is false. Biden says he has directed National Interagency Fire Center to respond to Canadian requests for additional firefighters. Fire suppression assets.
And just
Pick
to
'em off.
speak to that move, it was up over 41% on the year ahead of today's move, and now it is only up about 16%. Just goes to show the magnitude of the selling we're seeing today. But here to tell us more on these lackluster first quarter results, I'd like to welcome in Renita Young, senior markets correspondent for the network. So Renita, doesn't look too promising from a chart perspective, and I can imagine the results do match that.
You're absolutely right, Jenny. So that's why shares are tanking today because of those disappointing results. But the company also canceled its conference call, and the CEO is now out. He's been fired. But let's take a look at the numbers. The company did manage to narrow its losses from the year prior to 14 cents. On revenue, however, that dropped 11% year over year to $1.24 billion. Now, while sales in Europe managed to increase 26.2% year over year, they dropped by more than 16% in the United States, 18.5% in Canada, and then fell almost 9% in Australia. GameStop is attributing that drop in sales to several things: currency fluctuations, fewer significant gaming title launches, soft sales in pre-owned software and hardware, and then a drop in collectibles. But interestingly enough, Jenny, that's the area where analysts see more long-term growth possibilities within collectibles. Now, GameStop also incurred about $14.5 million in transaction costs relating to that restructuring that's been happening in Europe. But on a whole, GameStop has improved margins by extreme cost cutting, and SG&A expenses were down year over year. Now, it's also been an executive shakeup, of course. Matthew Furlong is no longer the CEO. Ryan Cohen is now executive chair of the company.
Renita, I got a pretty ominous quote from an analyst at Wedbush named Michael Pachter, who covers this stock for Wedbush. He says in a note released today, "We remain convinced that GameStop is doomed with declining physical software sales and a shift to sales to subscription services and digital downloads sealing its fate." Wow. I mean, this has been a sentiment that has kind of been, I would say, the institutional kind of side of investing for quite some time, that this is just a declining business. Retail investors have kind of fought against that, or at least a pocket of retail investors that have somewhat held this stock up, and it's sort of given it a lifeline. But it seems to be that the waves are choppy again, and the waters are maybe a little bit choppy here. Any final thoughts on GameStop? Because, I mean, the CEO abruptly leaving, canceling conference call, disappointing numbers. There's not really just not a lot to like here. This is like kind of worrisome.
It is worrisome because it makes us think that the company's like, I don't want to talk about it, right? But in reality, GameStop needs to figure out who its true customers are. That's the thing that's been a little bit muddy, especially as people don't go into game stores anymore. They get their games online.
Yeah, and I have to say that Ryan Cohen, who is sort of the leader of the meme stock frenzy, he was also a major investor in Bed Bath & Beyond. Yeah. And not to compare the two companies, they're very different, but it's not like he can necessarily be the white knight that comes and saves the company, because frankly, the fact that they have moved back to brick and mortar instead of subscriptions was bizarre to me. But we can see, I mean, clearly shares are reacting negatively, down now over 17.5% on the session. We'll leave it there. Renita Young, appreciate all of your insight today. Now, coming up next, it's time for Under 30. To end the show on a positive note, we are looking at Carvana absolutely on a tear higher. Shares are now up over 44% on the session. We'll discuss that with George Tillis coming up next.
Head and shoulders there on SPY. Finally getting built there. We improved Q1 compared to last Q1. We did on some metrics. GameStop did. They were right about the collectibles, and we saw it in there on the filing. Collectibles are down a bit. But yeah, I thought they just improved on revenue year over year also. Look at it again. Nap time. You might be buying in today also. This volume is crazy. For that tasty STI, you come just in time for my coffee. Jimmy's coming down a little bit here. If it keeps selling off, I'll start rolling some cash secured puts on it again. IB's not great, but it's not bad.
PM Eastern Time, coming to you live from the New York Stock Exchange. Somewhat of a mixed market, but looks like a losing week for stocks at the moment, snapping the recent winning streak, right? So we had the S&P up 3 weeks in a row, the NASDAQ up 6 weeks in a row. So we'll see, today and tomorrow, see if you can squeeze out a gain. The S&P 4283 up 16 points. The Dow's at 33,800. That's up 135 points. Tech-heavy NASDAQ. Tech's doing the best of the bunch today, while tech is gaining. Energy and financials had been lagging. And here's a look right now at the U.S. dollar, 103.33. Gold is gaining. That's up 1%. That's after that jobs report. Oil, 71.45 the barrel. That's coming off as there's been some news there pertaining to U.S. and Iran. And volatility, well, look at that, 1496 right now for the VIX. Bitcoin, 26,600. For some of the biggest stories in the markets, we welcome in Renita Young, Senior Markets Correspondent, TD Ameritrade Network. The first one you're taking a look at is Tesla, which has had such an incredible run over the last week and a half or so, looking to Spain now. Tell us about that.
You're absolutely right. It is up for about the 10th consecutive session. And today, the rumor mill is churning. Reports are circulating that Tesla could be making a huge investment in Spain, and also a separate story about the Cybertruck that I'll talk about. Now, shares are rising, of course. A spokesperson for the regional government of Valencia in Spain told Reuters that it did hold.
Is this what you were talking about, Al?
Automobile manufacturer about a large automotive investment, but declined to give more details. However, a second source confirmed to Reuters that it was Tesla, and that local media said the investment would be a car factory that would be about 4.5 billion euros worth. And the response to this has been pretty incredible, especially since Tesla at one point had been saying that it's been trying to diversify away from China, even though it did pledge more business to China last week when Elon Musk visited. But it represents more diversification for the company there. And Spain is also Europe's second largest car producer. Elon Musk has also expressed interest in beating out Volkswagen, that has several different locations, several different factories within Europe, and now is working on one battery factory in Spain. Meanwhile, there is a report about the Cybertruck, the long-awaited
That was me,
Cybertruck,
sorry.
finally starting production.
Backed away so much.
Being
What's your
ready.
position on it?
The report says that it'll be able to, or
That's had
Tesla will be able
quite
to
the nice
churn
rally.
out about 375,000
Wow,
Cybertrucks
look at this thing from the
per
low.
year. And that's the base volume.
Almost
Elon Musk
300%.
has expressed wanting to churn out as many as 500,000 a year. Now, the first release candidates for the Cybertruck, they're expected to be at the end of this August. They're typically the last step before the start of production, which is expected to be early October. But the planned delivery event will be held at some point at the end of
You're trading the shares?
quarter,
Nice.
Nicole.
All right. Yeah, everybody's looking forward to that Cybertruck. I can't wait to see those driving around on the highway.
Yeah.
And then the casino stocks. Jeffries makes a call there.
Yes, Jeffries made a call with the casinos, looking at win and
I still see banks collapsing though, so be very careful. There's a reason why the IV's so high on Pac West.
Macau and the reopening is already priced into the stock. So the analysts took win to a hold.
Some of
from a
those ones I was looking at
buy and cut
before
the price target to
that have lower IV
$135.
might be better,
Still leaves about a 14%
more safe.
to the upside from where it's been
These
trading
ones
today.
with the insider buying.
That the bull case arguments for growth,
TCBI, STEL. This is on Discord too. It's on Happy DD. I just screenshotted it. They're smaller banks, but big insider buying. IV's lower, so but still probably have pretty good volatility for the shares.
$65 a share from $69. That's still around a 13% move to the upside, but downgraded Las Vegas Sands to a hold from a buy for the same reasons.
All right, Renita Young, thank you so much. Good look at some really important stories there. Thank you. Now let's take a look at the bigger picture. Ahmed Rice goes with us, Chief Investment Officer at Insignio. Thank you for being here. You talked about being on the high end of this range, right? We've got above 4,100, and look, we were about 2% off the 52-week highs, right? And even less so. We were getting close to 52-week highs in the S&P 500. The NASDAQ did, in fact, hit a 52-week high. Now what?
Yeah, so our target range for the index was between 4,100 and 4,300. And the fact that we're brushing up against that range right now, we think is a good opportunity or good time to do some rebalancing within our portfolios. And we're advising our clients to do the same. And what we're doing is that we are shifting over to quality. One thing I want to point out, the index, remember, what's been happening with the S&P 500 is a bit of a mirage. Because really, you're talking about 6 or 7 stocks that are having an incredible year, and the rest of the index is really not doing much. In fact, if you look at the top 7 stocks in the S&P 500, they're up a whopping huge amount. And you look at the rest of the 493 stocks, they're actually flat to down for the year. So this market breadth, we don't think is a positive sign for further gains from here. It's quite narrow. And so our position is, look, we're here. We've had a good run on the S&P 500 index, especially if you're tied to it via ETFs. So right now is a good time to do some rebalancing in your portfolios. Move especially to higher quality. And when I say quality, I'm talking about quality factor. And these are stocks that have high return on equity and low debt leverage. And these are companies that tend to do well in an environment of slowing growth where interest rates will remain higher. So those are the stocks that we want to be positioned in.
Yeah, I mean, I just looked yesterday, 4299.19 was the high on the day. So you're right, pushing up against that 4,300 level. So at this point, when you're looking for quality, what would you sort of X out and say, that may seem like quality, but it's not?
Bond buyback program and their deposits grew by a large amount? Oh, I didn't know. Good call. I did some research on it.
You want to sort of stay away from more cyclical names like sort of deep value stocks, which are not going to be performing as well. And you've seen it in the performance of the small caps. The small caps have not done as well as the larger caps. We think this is something that will continue until we finally get to this long-awaited, long-expected recession, which we do see beginning sometime in 2024. At that point, that's when you want to start going in heavy into the small caps and the deeper value plays.
Right, understood. So at this point now, what are you watching when it comes to China? Because there was a lot of optimism surrounding the reopening, but it seems like a bumpy road. It's open, it's not open, right?
Yeah, so we think some of the and we share a lot of the concerns longer term with China. Look, to be honest, we think longer term the Chinese equity market specifically is a less attractive place to deploy capital. I think there's no question about that. But we do think in the short term it's oversold and just way too cheap. And we do think that some of the concerns on the near-term growth trajectory in China are also overdone. I think investors saw a lot of, let's say, weaker data come out in April, and they said, well, that's it, it's over, time to exit that market. And what we've seen is
That's
that
me
the
again.
data that's come out here in May is kind of already reversing some of that trend. So we do think there will be a bounce tactically in the Chinese equity market. We still do think it's cheap and oversold. But again, that's just for a tactical play, because longer term, I think there's no question overall Chinese equities are less attractive over the long run.
Is there a chance that we already had the bear market?
I guess there is a chance, because this cycle has been so different.
The bear market, the recession that people are waiting for, you know what I mean?
Yeah, no, I totally get what you're saying. And listen, this cycle has been very atypical.
Yeah, no, those are good points you have, Cameron.
It's just been so nuanced.
Thanks
and
for
so
sharing that.
than previous cycles because of the pandemic and
A little
because
more
of the
confidence with it.
response, that I wouldn't necessarily bet anything out. But it would be very strange for the market to have completely bottomed before recession even begins. In fact, if you tend to see what happens is that the market usually tends to top out anywhere from 5 to 7 months before recession begins, which if you believe our models, which are telling you that the recession will begin in early 2024, it means right about now is when that market should be sort of at least doing a top.
Right, understood. Tell me about AI. Obviously we've seen a lot of names at new highs and running hot. I mean, NVIDIA is the one that comes to mind. But today I already did Adobe with AI. There was something else I did with AI. Everything has a little new AI twist to it. What are you watching?
So look, we're very bullish on AI's sort of long-term accretive effects in the economy. We think it's going to lead to a productivity boom, not just in the US, but really across the world. So what that's going to do eventually, it's going to, I think, lead most people to see that the markets perhaps are not as expensive as they once previously thought, because earnings are going to be that much more accretive and companies are going to be that much more productive and profitable. But I think what the market's getting wrong right now is that they're sort of pricing in those benefits right now. And if you look at previous eras where a technological revolution has happened or occurred, it usually takes some time for that to actually roll over into the real economy and for us to start seeing the productivity gains that will be generating from that.
Right. Is it not the right idea to just sort of sit on the sidelines right now? I mean, there are a lot of people who have cash. What do you tell them?
Well, look, if you're a longer term investor and you don't care about, sort of timing the markets, which we generally tend to be,
6.8.
you definitely want to start nibbling into these positions and into
Little
some
bump
of these stocks
amidst
and
a long downtrend.
Like I said, we do think this has game-changing potential for the economy overall. A few stocks are going to benefit at the beginning. We've already seen that. The big names, Microsoft, Google, NVIDIA. But overall, the benefits are really going to accrue across the board, because we do think it is going to be a major productivity enhancing technology.
It's great to see you, Ahmed. Thank you so much. Ahmed Risco, Chief Investment Officer at Insignio. Thank you. All right, coming up later this hour, Lovesac. The founder and CEO will stop by with the very latest look at the company's earnings report. It's been doing so well over the last year. Crude oil, a volatile day, and some of the latest breaking news over the last hours or so. What to watch there in the energy sector. And the panel will discuss GameStop and its post-earnings move to the downside, of course, the CEO's departure. And Jeffrey Kleintop is up next. I want to talk to him about Europe's technical recession. Meantime, the Nikkei is at a new high. What's going on, Jeffrey Kleintop? He'll tell us. Plenty to get to here.
Lovesac, baby, Lovesac. Baby, Lovesac. Stop making that noise. Up a little bit here. Still could be in this head and shoulders. It's kind of denying it though. If you're making an inverse head and shoulders now, or another move up higher. That's the VWAP. Really. That's me. Hope you're awake. Just getting my motherboard's software. I formatted it and never put it back on here. So I want to monitor my CPU. See if I'm getting spikes in my temperature.
And Bitcoin is down about 2% for this week. Coinbase is down over 15% this week.
Okay.
All right, let's welcome in our next guest, Jeffrey Kleintop, Chief Global Investment Strategist of Charles Schwab. Hey, Jeffrey Kleintop, good to see you. Thanks for being here. Let's start with Europe. That's certainly always on your radar. A technical recession. What does it mean? Why does it matter to folks here in the U.S.? Tell us more about it.
It's official. So the Eurozone economy shrank 0.1% in the first quarter, today's revised data showed. And that delivers the first recession since the pandemic because GDP also fell to 0.1%
sorry, I'll turn that off.
in the final.
What are you doing? Broken.
For corrugated liner board, what most cardboard boxes are made out of, has also fallen, similar to what it's done in past recessions. Now, in contrast, Nicole, service industries, which make up the largest share of output among economies, have continued to grow. We heard earlier this week from the airline industry's main trade group, the International Air Transport Association. They doubled their profit estimates for this year on the surge in flying in North America and Europe. Europe and Germany in particular are more cardboard box industry focused than economies in the US that are more service focused. So we're seeing a little bit more of that cardboard box type recession around the world, reflecting a little bit more intensely in Europe.
And are you surprised to see that we've seen some more rate hikes? You had the Bank of Canada, you had RBA. I mean, there's still a hiking move happening here, even though the Fed may take a hawkish pause.
And the European Central Bank seems set to hike rates as well, despite news of a recession taking place there. And that's because inflation still just remains too high. You can parse those dot plots and listen to Fed and other central bank officials all you want, but if the data demands it, they're going to pivot and make, or they're going to stick with hikes and move away. I mean, we heard from the Bank of Canada earlier this year and the Reserve Bank of Australia saying they were done. They paused rate hikes, yet they had to come back this week, both of them hiking 25 basis points as inflation just remains too sticky. Of course, that's ahead of the Fed meeting next week. I think it's interesting because higher Fed rates had been a big drag on tech stocks last year, but this year, amid speculation of a pivot, central banks flipping from hikes to cuts, we saw tech stocks really get excited about those prospects and really perform well. But now we've seen the tech sector as the worst performer so far in the month of June as the market's reassessing those outlooks, not for cuts, but for maybe more hikes by some of the world's major central banks.
Yeah, I see the MSCI World and the different sectors here. And while tech is the only one that is negative based on this chart that you sent us, but I see energy, material, and industrials giving it a go in this month of June. I know we're only a few days in, but what does that tell you?
I think underneath this market that feels like it's been churning all year, there's actually a bull market underway, but it's maybe not the areas where we're most focused on. I think there is genuine concern. Just listen to your conversation with Ahmed about the vulnerability of the narrowness of the tech-led advance in the stock market being run away by a few AI stocks. But those concerns are not found outside the U.S., where the bull market's been pretty broad. You know, since the bear market ended in October, the message from the performance of the average stock is that a new bull market seems to be underway. The MSCI EFI index of developed international stocks, along with the equal weighted stock markets in Europe and Japan and the UK, are all up over 20% measured in US dollars since the end of October 2022, meeting the technical definition of a new bull market despite the recession. Yet the equal weighted S&P 500 is up only about 4%, making little progress. So that just tells me that, you know, what we're seeing here is those AI stocks have really run the market capitalization up, yet they've left the average stock behind. And if you think that breadth reflects the durability of a move in the overall stock market, then the greater number of stocks that are helping push the overall market higher in Europe has maybe more support than this rally we're seeing in the U.S.
I see. And then what's going on also in Asia? I mean, the Nikkei is moving to new highs.
SPY's moving up.
What's happening in China?
Slapping the bears on that head and shoulders.
Some of the data has gotten a little
It makes an inverse head and shoulders here now.
In April, but more it's Japan focusing on unlocking value in their companies. There's been a real focus on lifting price-to-book ratios above 1. Japanese companies have not really been focused on shareholder profit maximization, and there is a new emphasis by the Tokyo Stock Exchange to compel companies listed there to improve those things through buybacks and through other type of financing arrangements, but other focuses on operations and other things to really drive better profitability. And that is really showing up.
Weird, I can't even open it now.
In Japan that we're seeing in the US this year as we
it works. Sorry, guys.
And just a quick thought on the Fed. I mean, I know we're still waiting on CPI next week ahead of the Fed's decision. And then you have Europe deciding the next day. I saw on your chart they're deciding whether or not they'll be hiking on the 5th.
Here's my fatality.
Right? So what are you waiting for?
Right.
What are you
info.
For?
trying to figure out whether this is a pause or a skip. The market's increasingly
CPU temperature is
is this might
76
just be a skip?
Celsius.
Maybe they skip in June and then hike again in July. That's a far cry from what the market was thinking just a few months ago, with an outlook for maybe 4 rate cuts in the second half of this year. So it's important to get a sense of where the Fed's head is at. But as I said before, as we've seen with the Reserve Bank of Australia and the Bank of Canada, if the data, they're so
Yeah, that's high.
If the data compels a hike, they're going to hike no matter what they say. So be careful trying to draw too much out of their comments, because frankly, the data can change them in an instant.
All right, good to see you, Jeffrey.
Oh, it's not too high.
Thanks for having me.
Jeffrey Kleintop of Charles Schwab. Thanks. Coming up next, Lovesac, the founder and CEO, Sean Nelson, will join us. He'll go through the company's latest earnings report, what you need to know. We'll be right back on the watch list.
I know, it's like, I mean, I have a ton of tabs open, but it's not like more than, yeah, it says average between 70 and 80 Celsius. You're like loading it up. Doesn't seem like this. So it does spike to 86, 87, 90. Yeah, so it's spiking when my browser's kind of lagging out. Or if my water cooler's got to be on, or it would be like fully lit mode. Three. Says I have 3 chassis fans. I can't remember. I'll have to look. Yeah, so the temperature's chill. It's at 77 now. 80. 82. Yeah, why is it sitting so high? Yeah, now it's up to 87. Not doing anything. Yeah, I'm wondering if the thermal paste is like replaced. That sucks. I hate doing it. It's only been, I mean, it's been like a year. I just replaced that whole motherboard a year ago. I know. Never had to tweak with my fan curves though. That's the thing. I'm not have to change that. Just started happening, which makes me, the only thing I can think of is, yeah, the paste is dried out like that. It's an i7 6800K, 3.4 gigahertz. Yeah, it must be my temperature that's causing it to lag spike like that, though. Motherboard temperature is at 161 Fahrenheit. My fans aren't even like ripping at all either. Like when I've bench pressed this thing, I mean the freaking computer sounds like it's gonna take off the ground. It's yeah, they're just, I mean they're all cruising, but they're not like getting up full speed. It is a little old, that's true. Hit Lisp. Still rallying. Is it weird that my motherboard temperature fluctuates also? I think that should stay pretty constant. Get a new PC. I don't need a new PC. Fix this one. Works great. Like 2 weeks ago. Oh, it's moving up more there. Wow. Yeah, I probably do need to clean it out in there. I usually vacuum it. You just blow the air around? My motherboard's going from 54 up to 161 right there. 54 is the low. Goes up with the SPY. 63. 154 to 163 is the range it has on there. But it's moving in correlation with the CPU. 170. That's weird. My chassis fan speeds are different. Look at that. Might have made a little inverse head and shoulders there. Head, shoulder, shoulder. On up she goes. Bon voyage. I use compressed air, but I feel like I get it much better by vacuuming it. Yeah, is that weird? Oh, now they've evened out. Or no, yeah, look, see, chassis fan speed, fan 3 speed is 1480 RPMs. These two fans are 940 and 895. Assuming my CPU fan 2 is water cooled, so I'm assuming that's the fans on the radiator thing. I think I have both those are plugged into one port, so it's probably just reading as one fan. Yeah, I've got chassis fans, and I have the water cooler fan. I have fans on my graphics card too, I guess. Interesting. All right, DIY. Yeah, I mean, I have compressed air. Done that too. I'm wondering why my fan speeds are different though, and why am I getting a spike? My fans aren't ripping. I need to turn up my fans manually and see if that helps it. Here's my fan curve. Don't turn upside down. I turn upside down and I inhale it. You don't ever do that? Or fan test? But testing the fans. So they should all almost be running at full tilt. Undervolting the CPU, really? I mean, wouldn't that just increase the load if it didn't have enough power? Fantastic. Maybe some of my fans aren't working. I mean, it's pretty warm. Like, I keep it pretty warm, so. Increasing the load on the CPU, though, that would shorten its life, I would imagine. And how would that make it faster? Lowers performance. Right. But that's like the opposite of my problem right now. Oh, just from reducing the heat. Yeah, I need to figure out how to reduce the heat without undervolting if I can. I feel like my fans aren't running like full. Then I need to get that going first. Oh. Yeah, and I'll look into it. Undervolting my CPU. Right, so if we're above 70 degrees, this fan should be running at over 90% at least. And we're above 70 degrees on the CPU. I don't know if he's running at 90%. How do I know? I don't think so, because this one's running 1400 RPMs and these are only running 900. Let me check my fans. I think they're all the same. All the chassis fans, I think they all be the same.
Moving average. I want to point out the S&Ps still holding below the key hurdle up around 4,300, and the Russells we were just looking at below that 1,900 level. There again, 3 of the 4 majors in positive territory, and I mentioned the Dow leading structurally, the only one of the 4 majors able to take out yesterday's highs, but here you can see it's the NASDAQ that's leading percentage-wise up around 1%. Nicole, again, kind of a mixed bag, but a little bit of strength, still somewhat range-bound price activity. I did want to point out the NASDAQ's holding up near the highs for the year. You got the Dow, which is coming back with some strength here today, playing catch-up a bit, but keeping a close eye on all 4 of the majors as we head into the late day.
Yeah, I mean, I was going to say that they are snapping the recent winning streak. I'll check the NASDAQ. So the NASDAQ week to date down 0.6%. It has a little way to go to then make it 7 weeks in a row of gains. But as you noted, we're at those highs. We've been at 52-week highs. Tell me a little bit about the U.S. dollar. That's something you're watching.
Yeah, actually some weakness here today coming off, and a lot of focus on the dollar rates as we head into the Fed announcement, and a fair amount of speculation into that meeting next week. Now, I do want to point out here you can see a big move lower, down 0.75% here, currently trading in terms of the futures at 103.31. We got down.
Yeah, I have 3 chassis fans, and then 2 fans on my radiator.
The 104 handle. 104.04 in fact, so
they all seem to be going.
So here, look at the price activity we're seeing on this
I
screen.
mean, they're all going.
Range-bound type trade.
Not like crazy, but coming.
Extreme thereof, but this is a product that's been.
All right, thanks DIY. Keep on your deck, man.
That's just waiting for more information. We're going to get that next week with the Fed. It seemed like, again, we saw some strength after that strong jobs report. The dollar worked its way back up to 104 recently, but there's been some pushback in terms of expectations from a Fed hike next week. We saw the BOC and the RBA both surprised with rate hikes go. Again, fostering a speculative environment, but not necessarily a lot of movement one way or the other in terms of price activity. The dollar.
Okay, I might look at the paste also. I might just repaste it. Do you guys ever use like dry? Not paste, but it's like the matte. I've heard it doesn't disperse the heat as well, but it's like you can reuse, like it never goes out, it never goes bad, and I like it because it's not messy, and you get a full full coverage, like even coverage. In fact, that's maybe what I even, no, I think I used paste when I did it. Yeah, that's a good point, with it just spiking. But still, if I just crank these fans.
What are the takeaways that people should be noting?
So this is the time of year where we're kind of looking for some catalyst for action right now.
I forgot why the fans are running at different speeds.
So you see today, you know, Iran, U.S. propose a deal, crude drops.
RGB fans make it run so much faster.
Now halfway through the day, it's back up half of that.
There's like all those go fast stickers on my cars.
I think a couple things.
If you get a double top here on SPY.
Is we're just waiting for demand. Is China real coming back? Is China not coming back? Maybe even where's Europe going to be, you know, with their own demand? It's just waiting for some catalyst for demand. I would say in natural gas, you're seeing a lot of companies take advantage of low prices, and we're seeing a little bit more acquisition activity than we had.
Did the fan test and just, instead of doing it, did it, and then nothing happened at the end.
Right, we're at 71.23 right now for crude oil, but you're watching all the different elements of energy. But where is the path of least resistance for oil these days?
The path is still going to be where the demand is. When the demand comes, where it comes from, and it almost centers all around China. I mean, you look at the forecast, most of the forecast, even for the second half of the year, they don't get to $80.
Oh, that's pretty cool.
23's forecast.
Yeah, like
that'll change significantly.
Not seen this before.
If China ever wakes up, when Europe comes back.
Or we have some big changes in what's happening with OPEC. I mean, Saudi Arabia basically said they're going to continue with the cuts in July, and they're sort of, you know, picking up the chips of Russia, right? Because they're not cutting. But let's move on.
And it's a lot about what you say you're going to do, and then actually.
You guys seen this?
Yeah, but that's
you can
been the story
browse what's on your motherboard. Like interactive too. You can click on it and see what it is.
Russian crude is actually going has been, you know, a bit of a mystery that's
right up here.
to be unraveled now. And
see what's used on each port.
Certainly it goes to North Korea. It goes to China. Some of it may go to
cool.
India. and the quantities are beginning to be a little bit more obvious now too.
I want to be in the know too. I want to get the inside scoop.
It's hard to hide things today.
We're producing more here at home now lately, right?
Yeah, maybe I'll mess with it this weekend. Maybe repaste it.
Last couple weeks, certainly record production of propane, something I'll follow.
Does that sound good to you?
Yeah, so record production is great. We can always export.
Carvana broke out. Yep.
Ready markets for those.
Well, we also have to refill.
Made that Head and Shoulders, but held the support.
Which we've not started very well yet.
I think we were going to refill it by a few million.
675.
Took out 230 million barrels. Yeah.
I'll give you 3 back.
Yeah,
all right. So
that would be a gap fill.
Another day. Tell me about propane, renewable propane, nat gas. These are kinds of things that are really in your wheelhouse. Explain to us when we're using these and why are these important?
Well, it's great that you know something about it. We're here at a conference in New York talking a lot about renewable propane, which is a part of that story with renewable diesel and sustainable aviation fuel. But it's really where the industry.
We got pushed to the 14th.
Right. We need to have a cleaner climate. We need to cut carbon. One of the ways to do that is to go find anywhere that we're just throwing something away. In our case, agricultural waste, dairy manure, methane that's escaping into the air. We've figured out ways to capture it.
Where are you seeing that?
Into sometimes renewable diesel, renewable natural gas, and for us,
Green for lean uses.
The impact on the economy is significant and the impact on the climate is even more significant.
So in the end, this can then be translated for transportation, for
from June 9th?
power generation. Explain
used
that.
Exactly where where natural gas or propane has been used. Except for us, we see those markets flowing into transportation. Get away from
profiling. On their website or whatever, it's still showing June 9th for notice of potentially assumed contracts and unexpired leases. That's it, right? Nice, Fire Marshal Bill. Happy to hear it, man. That's your first custom PC too, right? Fun building it and having it work.
The balancing authorities have begun to signal that maybe we're a little bit ahead of ourselves in this energy transformation.
HKD pumping soon. Potentially, if it is maybe used for collateral, and then you have the whatever from that DD we saw 15 days from there for barbecues high. But that was assuming that HKD already had its pump, and we're going to see the high from barbecue 15 days from this pump right here on 6/2, putting it at like Thursday or whatever. I don't know. We read that Wall Street Bets DD on it. It was actually kind of interesting. It was Wall Street Bets Elite, not even just normal Wall Street Bets. Elite. Something. Yeah. I gotta figure out how to get my chassis fans to run at the same speed. I don't think they should be running at different speeds. Yeah, looks like we're getting a little double top there.
Utility costs. I see the other day where their GDP is down nearly 1% over the last 2 reporting periods. Kind of shows you the importance of having reliable energy, enough energy, and affordable energy. I would say today in America we're not making those mistakes, but I hope people are sitting up and noticing how important it is to have clean energy, but reliable and affordable.
I will say, as we are speaking, I see a headline that says the White House quickly denied any reports of looming interim deal as fake and misleading. We were talking about the speculation pertaining to an
third. Oh, okay.
Noted, right? We saw
why was it
go down about 3%, and it paired
okay.
that. It's like half that. And you noted how it came up off the lows quickly. And so that's been the talk all day, folks. But now we've gotten the confirmation from the White House quickly denying any deal at this time.
And this just really isn't a supply. It's not really a supply story. It's a demand story.
Right. Let's talk about the grid.
Yeah.
Let's talk about the grid because, I mean, you talk about what went on in Europe. And, you know,
it's fake.
Concerns with that they saw in energy. How about their energy prices basically taking up their entire paycheck? You have rolling blackouts in California. Don't get an electric vehicle, but don't charge it because we don't have enough electricity. I mean, there's just so much going on.
And we
I
have
like the idea of a transition, but they got to get this right.
Well, and I think what you're seeing is kind of, and I actually don't talk about it as a transition. I talk about it as a transformation. Transitions are smooth and easy. Transformations are bumpy, and people get left behind.
Okay.
And you're seeing that certainly in Germany, but we're seeing it here in parts of America too. Buy an electric vehicle, but don't charge it. And I think that will get worked out over time, but it's not going to be near. We're seeing that now. You've seen about as we talk about the debt ceiling. When we talk about the pace of the transformation, really around permitting and Mountain Valley Pipeline, but all of the plans are pretty well delayed because of permitting issues, maybe sometimes supply chain issues, sometimes financing issues. We're even seeing now where some of the big offshore wind farms a little bit in jeopardy because of the pace of inflation and cost nowhere near where they thought maybe 3 or 4 years ago.
But I do like the idea of the U.S. Moving.
How much say undervolt is CPU?
I mean, the idea is to be somewhat energy independent in case of something, right?
And the U.S. is in such a dominant position because of its natural gas, also its propane supply.
Beautiful.
In both of those cases, we really lead the world.
Tucker. Thank you, and good luck with the whole group today with the council.
Got an engulfing candle there on the 5-minute and a double top. I'd say it's a good short.
Still ahead, our panel's ready to talk all about GameStop, the earnings, the management shakeup, sinking stock today. Coming up.
Once you break it. Oh, I can do it right here. Right? CPU input voltage fixed. Can I lower it though? Yeah, I can. This is it right here, right? CPU input voltage. I do adaptive mode. Interesting. Assuming that's it. I don't want to have to like restart though. I'll do it right now. Potentially I'll get a crash though, and then I can do it once it restarts. And if I do it in BIOS, I'm not going to know how much. I'd like to get like real-time feedback. But I don't know. Yeah, I'm sure you're probably more risky, like you said.
All the inside information on what's going on with GameStop. Obviously, I think we're seeing the stock drop here. It's really just a lack of confidence in the management and clarity about the direction, where it's going. Is it going to get through the
just mess with everything and see if it'll still boot up.
There? And so I think
Whee!
investors are voting.
And that's the whole thing, because when we were buying games and consoles and cartridges and CDs, that all these games, Sandra, I mean, I couldn't go to GameStop enough. That was where my kids wanted to go. And then enter digital downloads and PCs, and nobody went to GameStop anymore. Now what? You know, they're still seeing revenue growth, at least in part.
Poor's profit. Nailed it, Granite.
I mean, I just have one word.
Love for messing up my perma-breaking windows because it loads up.
News. And you're right.
Well, I can do this. I can do this, and so it doesn't apply unless I start this program.
I have 4 kids, so I know well what you're talking about. Always being at GameStop.
Right. So there's a auto apply when program starts. I can have it so it won't even apply.
That's declined.
Unless if I start the program. I think that's what that's saying.
Yeah, so at this point now, Jim, you call this stock a trade. Look, today, when I made a note, it was down 19%, the largest percentage sell-off that we've seen since June of 2021. I don't know where it is the second, but how would you go about trading this, Jim?
Yeah, so when I say it's a trade, this is me putting on my technical hat. On the very short term, it doesn't look terrible. Now today, obviously, looks really bad, but the technicals have improved. If you're going to be a trader now, keep in mind, I view a trade very, very differently than an investment. And so for long-term investors, I wouldn't touch it. I really wouldn't. You know, there's going to be some people that could speculate.
This guy's wanted to hit the bounce play.
I just don't see it improving much. And in fact, I think based on what's happening today, the trend was looking okay prior to today, but now it looks like the probability might be higher that it hits $15 before it hits $30.
That's what I'm thinking.
Oh, I see. So, I mean, even tough to say, hey, it's down 17, 18%, buy it today and then sell it at 23 or 24, because you think there could really go either way. I know you had some resistance levels like 26 and all that, but the sell-off and the concerns that people, I see what you mean, that it really could go either way here. Sandra, in the meantime, you talked about the short selling and really what the short sellers currently hold is a pretty big amount, and that's why it became, you know, the float was one of the reasons it became a meme stock in the first place, right? I mean, it's still an issue.
Exactly. So when you have an investor base that's pretty much, the Joes out there that own about 67% of the stock, and then you have Ryan Cohen who owns about 12%. Well, that doesn't leave that much left, but out of what's left, pretty much all of that is owned by short sellers. So that is a concern. Right now, we see, if you're looking at it, if as an investor, I would be concerned.
Yeah, and I see, Jim, in your notes, you talked about the analysts quickly. I saw some really low price targets in your notes.
Yeah, the 2 analysts have a price target of around $6. One of them's $20. So I agree that this is not great for institutional investors. We need to see more money coming in here from indexes, from asset management firms. They're just, you don't want to have a situation where there's more short sellers.
Yeah, we'll leave it there. I mean, $6 and $20 are both below where it is right now. Jim Warden, Sandra Cho, thank you both very much. Good luck today at GameStop. Thank you, friends, for being with me here on the watch list. I see you every day. I'm Nicole Petalides, 11 a.m. and 2 p.m. right here live from the New York Stock Exchange. Keep it right here. Market on Close with Oliver Rennick is next.
We must not watch BB show. Stalking horse bid still today, the deadline, day 5. So we'll hear about it once they have a filing for it, which might have to be by tomorrow. Maybe poison, yeah, it's pretty unusual. We've seen big drops, but it's always been after a sustained rally in the profit-taking cycle. We've been consolidating, and then to have that big drop, it is kind of out of place. It does seem like there's news, but we got no news. So, yeah, maybe trying to shake people. Maybe someone's selling, I'm not sure. Maybe someone knows something, like, a little concerning. Yeah, we still never got earnings from them. We don't know what their balance sheet looks like. Carvana breaking out again, 2470, 58%. Still going, looking good. Bull flag after bull flag. I did auto tuning on program here. I don't know what it's gonna do. If my stream ends though, you know why. Broke my computer.
And inflation, even at this point, the market's kind of looking like it may not be able to move the expectations for the Fed next week. I'm not sure I agree with that. We'll be talking about that with our guests here today and with our Schwab panel, of course. If inflation
Does my CPU speed, it keeps increasing it.